reported quarterly sales that beat analyst estimates, but Take-Two today trading lower by 2%. Recapping the Dow, the S&P, NASDAQ, all higher. S&P up 28, up by about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm indeed Kaylee Lyons alongside Joe Matthew here in Washington, where President Trump is making his return to as we speak from his trip to the Middle East. He's stopping to refuel in the UK, going to be landing at Joint Base Andrews later this evening, returning to D.C. at the end of this trip, despite yesterday even suggesting it was unclear what his destination would be after leaving the United Arab Emirates, because he was still leaving the door open to potentially making a stop in Turkey, where negotiations took place today between Russia and Ukraine, actually direct talks between the two for the first time in more than 3 years, though it wasn't at the principal kind of senior level that would have drawn President Trump himself.
Far from. That's true. President Zelensky was elsewhere in Turkey. He was also he said he'd be waiting for Putin. And of course, Vladimir Putin did not show up. Interesting, though, I think the comment from Donald Trump was, if it's appropriate, and clearly he didn't find that to be the case. But we want to dig into this with Nick Wadhams, who helps to run our national security coverage here in Washington at Bloomberg. Nick, it's great to see you. The significance of these talks, as Kaylee said, first time in more than 3 years. But I think I overheard someone say earlier, on the Russian side, only the interns showed up. How important was this meeting?
Well, I have differing views on that. I mean, there was a prisoner swap, about 1,000 people. So for them, it'll certainly be very important, though Russia and Ukraine have done a lot of prisoner swaps over the last few years. I mean, you can see it a couple ways. One is as a small step toward what President Trump wants, which is that direct meeting with Vladimir Putin. I think for the Europeans and Ukraine, they do see it as quite significant, because for them, it basically flushes Putin out. You know, the question is, does he actually want to commit to a ceasefire? Is he committed to the idea of negotiations leading toward peace? They would point to this meeting and say, no, look, he's not serious about it. Then they can go back to President Trump and say, hey, look, Putin's not serious about this. Let's get on with those sanctions and really put the squeeze on him. The big question, of course, is whether President Trump gets that message. So far, we have no indication that he's willing to take that step with sanctions.
Well, and President Trump said himself that no deal is ever going to happen until he meets with Vladimir Putin, not Zelensky. It needs to be Trump, Putin first, is the thinking of this administration? Yes.
He believes, I mean, this goes back a long time, that the president believes if he can get in the room with Vladimir Putin, he can do the deal. I mean, which is, you could make the argument, but we've been here before, most notably with the North Korean leader Kim Jong-un, where they had a big meeting in Hanoi in the first term, and President Trump walked away. He didn't get what he wanted, and he walked away, and that situation has been completely unresolved. So, you know, that is certainly his wish. Europeans are terrified of the idea, because if you get the two of them alone in a room together, who knows what concessions President Trump would be willing to make.
The fact that Marco Rubio was there, that Steve Witkoff was there,
that Rubio was going when he was in the Middle East. So Rubio didn't really have much choice. But I mean, extraordinary comments from Rubio on the way there, where he was basically like, listen, I don't think anything's going to come of this meeting, you know, but echoing what Trump had said. But you really saw there how low his expectations were for a breakthrough.
Well, so then it begs the question, if we continue to not see much forward progress, what is the U.S. or what are other allies willing to do next? We saw a post on X from Ukrainian President Vladimir Zelensky, who spoke with Chancellor Merz from Germany, President Macron, Starmer, Donald Tusk, all in this meeting. He says, our position, if the Russians reject a full and unconditional ceasefire and an end to killings, tough sanctions must follow. Are we getting closer to the moment where this administration is willing to put tougher sanctions on Russia? And what would that look like?
Well, the two very big questions there. I think we are getting a little closer, in part because the president's also coming under pressure from the Hill, Lindsey Graham, and more than 70 senators from both sides of the aisle are behind a very tough sanctions package. So that is certainly a possibility. The big question, of course, is what would those sanctions look like? When we talk about sanctions, it's always like, oh, there's going to be this big hammer that's going to drop and it's going to change Putin's calculus. Russia has been under sanctions for a very long time, well over a decade, and then we got ratcheted up even more after the invasion. And his calculus has not changed. So the big question is, do they go after oil? Do you go after Lukoil, Rosneft? Do you accept possibility that oil is going to get more expensive, maybe by another $10 a barrel or something like that? So that's going to be the question that President Trump is going to have to answer. And so far, aside from a couple social media posts, he has been mum. And Marco Rubio has also been quiet about this. So the administration really holding its cards close to the vest right now.
All right, Nick Wadhams, who leads our national security coverage here in Washington. Thanks for being with us on Balance of Power, where we add the voice now of Kelly Grieco, Senior Fellow with the Stimson Center's Reimagining U.S. Grand Strategy Program, with us once again on Bloomberg TV and radio. Kelly, it then becomes a question with what Nick was just describing about sanctions not necessarily being something that has shown the power to break the will of Russia and specifically Vladimir Putin. It becomes a question of what does change Putin's calculus. And I do wonder if militarily, when we consider the Russians' position currently in Ukraine in regard to its forces and capabilities, does he have a military incentive at the time to be considering a ceasefire? Or does he have every reason to believe he could keep going at the current pace?
Yes, I mean, I think you're asking exactly the right question, which is if you're going to ultimately get a deal and negotiate, both sides have to decide that they're better off taking a deal than continuing to fight this on the battlefield. And we do have, I think, a number of signs now that it seems Putin thinks that he may be better off fighting this on the battlefield, or at least making one last big push this summer with another offensive to see how much more territory he can physically take. And so my sense is that's probably what's going on here, is he wants to see what else he can accomplish on the battlefield, and then he might be more open to negotiations.
What are we sending at this point, Kelly, to Ukraine in terms of military hardware, in terms of, I guess, logistical support, or is the spigot beginning to run dry? When is Ukraine on its own?
Yeah, so, I mean, one of the big announcements about 2 weeks ago was that we were sending more air defenses. That came out of, around the same time as the mineral agreement was signed with Ukraine. So that I think is quite important, because that's one area where the United States is one of the only countries that can provide like Patriot interceptors that Ukraine needs. The other thing we know is that we're continuing to provide a lot of intelligence support. That's being done through European Command and NATO. That's really critical, even though we don't see it. It helps them a lot with targeting. But the real issue here becomes that the funding is, nearly out for providing additional aid. So the question then becomes whether Congress is going to authorize a new package. And, based on last time, there would be reasons to think that that's going to be really hard to do. And I think a lot will depend probably on whether Trump is still thinking that he can make a deal with Putin, or if he starts to become so frustrated with them that he decides to sort of ratchet up some of the pressure on Putin and maybe support some kind of package.
Well, as we consider both sides' positions here, and to your point about Putin perhaps thinking he might have a better hand here if he continues to pursue this war on the ground, we understand that the Russian delegation was demanding in talks today control of 5 Ukrainian regions, inclusive of Crimea, but also looking at Zaporizhia, for example, Donetsk, the kind of regions where we're familiar with that they've been jockeying for control of. Do the Russians have the controlling position in all of these areas right now, or is there still a chance that Ukraine can regain this territory before we get to some kind of negotiated settlement?
No, I mean, I think I would phrase it a little differently and say that right now the Russians are asking for parts of territory that they don't actually have under their control. They have made tremendous advances in all of those regions, but they don't completely control, for example, all of Donetsk. And I would expect actually this summer offensive rather, would probably focus a lot on trying to capture the rest of Donetsk. But I think that's part of the issue, is that where you don't have actually forces that are controlling territory, that Ukrainians are signaling, we're not prepared to hand you more territory. And so I think that's really one of the key areas of dispute right now, is exactly where the territorial lines will be. And there's a danger here, I think, that Putin's actually overplaying his hand, and that, instead of being willing to compromise of the territory that he's holding and go to a peace deal, he seems to want all control of all of these 5 territories. And I think the question will be whether he's able to accomplish that on the battlefield this summer. And if not, if he'll finally concede that it's not worth the continued cost of fighting and that he's had enough. He's satisfied what he has.
Mm-hmm. President Trump's been talking a lot about Iran this week. Kelly Grieco, first it was word of an olive branch, as he put it, news of a written proposal for a nuclear deal that went to Tehran. Today, on Truth Social, he writes, they have a proposal. More importantly, they know they have to move quickly or something bad is going to happen, he wrote. That's a direct quote, which apparently caused a great deal of confusion in Tehran. I'd like to ask you about the battle plan that he's referring to. What exactly would we do to move against Iran militarily? Would it be bunker busting bombs to go after nuclear facilities, or more than that?
Yeah, I mean, it's not entirely clear what the military plan would be. I would say, though, that we have been building up forces in the region, including bomber deployments in particular, including the type of bombers that can carry those really large bunker busting bombs. I think that buildup of bombers does have some kind of latent force of threat that potentially we would strike facilities in Iran. Of course, that would be a major escalation. And, the real risk then is that we'd end up in some kind of regional war. The other possibility is that we'd be willing to sign off on something, including possibly supplying the Israelis with some capabilities they might need to conduct some kinds of strikes against Iran. But, I think it's clear he's trying to use this sort of as a latent threat to create some pressure for negotiations, which is sort of what you do with these kinds of negotiations. But I would just say it's interesting to see that the Iranians seem at least somewhat receptive to trying to find a deal.
Well, the Iranian foreign minister, in response to the suggestion from President Trump that they should have something in hand, said on X today, Iran has not received any written proposal from the United States, whether directly or indirectly. He goes on to say, Kelly, in the meantime, the messaging we and the world continue to receive is confusing and contradictory. If it is indeed confusing, do you see the circumstances taking shape in which Iran is going to be willing to agree to something specific from the United States, or do those specifics still have much work to do to be ironed out?
Yeah, I mean, it's clear the specifics have much work to do to be ironed out. I think what we're getting at is actually something that we're seeing similarly with the Ukraine attempts at Ukraine peace deal, which is that President Trump very much sees diplomacy and making these sort of deals about interaction with himself, with another leader, where traditionally diplomacy, these kinds of really hard to get deals, there's a lot of groundwork that's laid before the leaders even meet to try to iron out all the details to find compromise and really pave the way for the leaders to essentially, at that point, agree to the terms. He tends to not do as much of the former and focuses more on the latter. And so I think we're seeing some of this play out with the Iranians as well, in that they're accustomed to that process where you work this out at a lower level and iron out terms, and not sort of Trump's more very direct, often even public approach. And I can understand why it creates confusion. This is, I think, one of the risks inherent with his approach to diplomacy.
Always great to have you with us, Kelly. She is with the Stimson Center's Reimagining U.S. Grand Strategy. Kelly Grieco, great to have you with us, as always, on Bloomberg TV and radio. I'm Joe Matthew in Washington, alongside Kaylee Lyons, where we're also seeking answers to exactly what happens to the president's tax and spend bill. Kaylee, it didn't pass the Budget Committee, and we'll be joined on the late edition of Balance of Power by the Congressman from Tennessee, the Republican in the middle of all of this. Tim Burchett will join us here on Balance of Power.
Yeah, so hopefully we can get some answers from him. In the meantime, more coverage is ahead here on Bloomberg Business Week Daily. We'll see you at 5 on Bloomberg TV and radio.
Monday, Michael McKee sits down with Atlanta Fed President Raphael Bostic.
I am hearing more concerns about the trajectory of the economy.
What are his thoughts on tariffs, inflation, and the Fed's rate path?
My projection of where inflation is going to go this year is pretty much sideways.
Atlanta Fed President Raphael Bostic, live from the Atlanta Fed Conference.
We are open to all possibilities.
Monday afternoon at 2:30 Eastern on Bloomberg Radio, Bloomberg Television, and the Bloomberg Podcast page on YouTube.
This is a Bloomberg Money Minute. Because of all the uncertainty around the Trump tariffs, a new survey of business executives by the Federal Reserve Bank of Atlanta has found that businesses plan to slow their hiring by an average of 13% over the next 6 months and cut their investments by 16%. A real setback for the president. A House committee today failing to advance that Trump tax cut bill because some hardline conservatives demanded deeper cuts to Medicare and other government programs. Despite that, stocks are moving higher on this Friday. Right now, the Dow and the S&P 500 are each up about 0.5%. The NASDAQ almost 1/3% higher. A huge recall from Toyota, nearly 500,000 late-model Tundra and Tundra hybrid pickup trucks to fix a problem with the rear lights where water keeps getting in. And another sign that tensions between the U.S. and China are easing up. The new Tom Cruise film, Mission Impossible: The Final Reckoning, will be shown in theaters across China starting May 30th. Tom Busby, Bloomberg Radio.
The global leader in business and financial news is now live on YouTube.
The live chat yesterday was very kind.
Watch Bloomberg Radio all day.
There are no such things as slow news days.
For market news, conversation, and insight from Bloomberg's signature radio shows, Surveillance, Bloomberg Intelligence, Balance of Power, and Business Week.
This story is among our most read.
Bloomberg Radio. Watch us every business day live on YouTube. Go to the Bloomberg Podcast page and click on the live feed. Bloomberg Radio. Context changes everything.
The business news of Australia is more important than ever. Australia is a leader in renewable energy and critical minerals, and its strong global ties and resilient economy make it a prosperous trading nation. I'm Rebecca Jones. Join me and my team of reporters every week for the Bloomberg Australia podcast. Get an insider's look into the biggest Australian stories, all in under 15 minutes. The Bloomberg Australia podcast. Listen on Apple CarPlay or Android Auto with the Bloomberg Business app, or wherever you get your podcasts.
Bloomberg Radio, where the experts come to listen. Ariel Cohen, Atlantic Council.
I'm listening every morning when I'm driving into Washington, D.C. You're terrific.
Representative David Schweikert.
One of the reasons I love Bloomberg is I'm allowed to geek out.
Jared Bernstein, U.S. Council of Economic Advisors.
Yesterday I was driving around. I put on your show. I learned 5 things in about 3 minutes.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app, and always on Bloomberg Radio. Context changes everything.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week. A very good Friday afternoon, everyone. I'm Tim Stennebeck, along, not with Carol Masser, who is off today, Bloomberg News cross-asset reporter Emily Graffeo. She is in. And Emily, it's one of the best weeks of the year, at least for now, for the S&P 500. Up about 5% on the week as we speak.
Yeah, it's been a pretty incredible rally, especially considering where we were just about a month ago, Tim.
Yeah, I think that's fair to say. Kind of shrugging off some of the economic data, consumer sentiment numbers that we got a little earlier. We're going to be speaking with Mike McKee about that in just a minute. Also coming up a little later in the program, we're going to go to India and speak with the CFO of a large telecoms company, part of the Tata Group. So we're looking forward to that as well.
And additionally, the state of residential and commercial real estate with the EVP of Capital Markets for Walton Global.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. We do have U.S. stocks pushing higher. The Dow, the S&P, NASDAQ holding on to gains. 24-point advance right now on the S&P at 59.41. That is a gain of just about 0.4%. We're on track for a roughly 5% gain on the week for the S&P. The Dow up 211 now, up 0.5%. We've got NASDAQ up 45. That is an advance of about 0.2%. The Bloomberg Mag 7 index up 0.1%, with the 10-year currently at 4.43%, the 2-year 3.97%, and gold down $50 the ounce, down 1.6%. West Texas Intermediate crude up 1.7%, 62.64 a barrel on WTI. Boeing has reached a preliminary framework with the Justice Department that would allow the company to avoid prosecution over 2 fatal 737 MAX crashes. That, according to family members. And Verizon is abandoning its workforce diversity goals and a range of DEI practices in response to a request from the FCC as it seeks to acquire Frontier Communications. That, according to the company's chairman. And UBS is in talks to compensate some clients for losses after they were sold complex foreign exchange derivatives that wiped out much of their investments when President Trump's tariffs sparked wild moves in currencies. That, according to Reuters, citing sources. Again, recapping here, stocks are higher. S&P now up 26, up by 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. We got a lot on our plate for Michael McKee, Bloomberg News International Economics and Policy Correspondent. He joins us right here in our Bloomberg Business Week studio. Mike, I want to start with the story that broke about 90 minutes ago. The Fed planning to shrink its workforce by about 10% over the next couple of years, mainly through attrition. This is a Bloomberg News exclusive, but when I saw the headline, when I thought of this, all I could think of was Doge and what Elon Musk has been doing over the last few months. Is it wrong for me to think these two things are related?
No, I wouldn't say it's wrong to think they're related. The Fed's not specifically relating them, and Doge has no legal authority to require the Fed to cut anybody. But they obviously have been criticized by the Doge folks. And Jay Powell has said in the past that they try to follow the general procedures of the whatever administration they have. So the administration is cutting bodies. So this may be just another one of the Powell efforts to preemptively curry favor with the administration, or it may be that they decided they are indeed overstaffed.
But Powell is the person who would make the decision about this, ostensibly.
Essentially, yes. Although the board, you have to understand that the way the Fed is set up, the Board of Governors is one organization that is an independent agency created by Congress with a different structure than the independent agencies where the president's trying to fire people. And then there are the 12 regional banks. And those are structured differently as quasi-public institutions. They are run by private boards of directors, and the whole Fed is self-funding. So Jay Powell would lead a directive to try to lower the head count. He could cut people at the board itself, but the Fed Bank presidents will have to go along with that. And some of the members of the Board of Governors are. There's a committee that supervises the regionals. So I'm sure this was a product of negotiations.
Is there any, thinking about what kind of employees at the Fed would be potentially first to get cut as a part of this headcount reduction?
It's hard to say because the Fed does so many different things besides monetary policy and research. You could see some of the research staff cut back, perhaps at some of the banks. There's been talk for years that maybe some of the regional banks could merge research staff so they're not all doing the same thing. But they also do the payment system, and that has now it's evolving into an instant payment system, its own kind of parallel to what all the crypto folks want. And so they may need fewer bodies. AI may start to contribute. They may need fewer bodies. And then there's always the question of regulating banks. And there's been talk in the administration of consolidating bank regulation. There are 3 separate bank regulators now, so that may have something to do with it down the road. There are a lot of places they could look for a couple here, a couple there.
I mean, a couple would be a few, because this is an organization that has about 24,500 employees as of 2023. This would equate to a roughly 2,500 person workforce reduction. You mentioned payments to Emily just now. What else are all these employees doing at the Federal Reserve?
Well, the payments and regulatory are the biggest sections, because payment system is obviously, it's kind of the underpinning of everything that happens in the financial world that we report on. And bank regulation is a huge group. The smallest group is the monetary policy one. And then there are other efforts that the Fed's banks do. They do community relations, and they have to live up to the Community Reinvestment Act, which so they've got to regulate what kind of lending gets done into poor communities. They have a lot of things like that. The whole idea of, should the Fed have its own cryptocurrency? Should there be a Fed coin? They put together a task force out of the Boston Fed, but with people from the board and the Boston Fed who have been looking into that and doing the research, et cetera. So there are a lot of different areas, a lot of different things going on.
We also got economic data today. This was, this Fed news is definitely at the top of the terminal right now. But new consumer economic data.
New unhappy consumer economic data.
Did we learn anything new from the consumer sentiment report today, just about the state of how Americans are feeling about the economy? People
were feeling lousy about the economy, and now they're feeling more lousy about the economy, is kind of what the takeaway is. The numbers that were interesting were the expectations index falls to 46.5. That's the lowest since May of 1980. I asked Joanne Shu, who is the director of surveys at the University of Michigan, whether that's comparable to today. And she said, sort of, but the economic conditions are different. In 1980, we were still in the very high interest rate Paul Volcker years, and people were depressed because that was also the Iranian hostage time period. So there was a lot going on there as well. But then you get the inflation expectations. 1 year, 7.3%. That's kind of a ridiculous number. But as Joanne,
that's like a 1980s number.
Yeah, the 4.6% for the 5 to 10 year is the highest since 1991.
Oh wow.
The 7.3 is the highest since November of 1981, which is not a surprise because that's about where inflation was at that time. But her view was these numbers are very large, but they just reflect how worried people are.
Well, how should we interpret that worry? Because the equity market is really shrugging off that worry today. We're not attributing, we're seeing another good day for equities.
Yeah, well, the stock market is kind of flying on its own at this point on various hopes and dreams. And there are certainly people you've interviewed who've said that this is all going to come to a bad end. The bond market more accurately probably reflects what's going on. And the bond market is basically sort of pricing in the Fed having to cut interest rates because the economy will slow because people will stop spending. And at this point, there's not a direct correlation between sentiment and spending, but there's a general one. And we did see retail sales come in weaker largely because people are probably concerned.
It's interesting when you look at the chart of the Michigan expected change in prices, this graph, it's higher than it was during the pandemic. Like people's inflation expectations are higher than during COVID. Does that surprise you?
Doesn't necessarily surprise me given the way sort of public opinion works. It builds on itself, and it's more of a concern for the Fed in that we just went through a period of high inflation. So people are more likely to anticipate the worst from inflation because they just went through it and didn't like it. So if we had high inflation and people are thinking it's coming back, they tend to extrapolate that out as even worse. And then the Fed gets worried because inflation expectations might become unanchored. And then you get the feedback effects of people going to their bosses and saying, I need a raise because inflation's high.
But as you remind us, it seems almost monthly, the saying, watch what consumers do, not what they say.
Well, that's why it was important, the retail sales numbers. And of course, at the end of the month, we'll get the overall spending numbers, which include services. And we have to see if people are indeed cutting back. And then you need it for a couple months because maybe they just pulled forward. The money they would have spent in April, they spent in March because they were trying to get ahead of tariffs and stuff like that.
So in your view, do you think Jay Powell is still more concerned about inflation than employment?
I would say they are at this point because inflation will go up faster. And we saw some evidence of that in the CPI and PPI of some initial tariff reactions. Companies seem to be reluctant to let people go. They go back to their experience trying to hire people coming out of the pandemic. And so they may be slower to get rid of people other than the Fed. But interesting aspect of the Michigan numbers, too, were a big rise in the number of people who thought they would lose their jobs in the next 5 years. So there is more concern on both sides of the Fed's mandate. And of course, if you think you're going to lose your job, you spend less.
Michael McKee, Bloomberg News International Economics and Policy Correspondent. Mike, have a good weekend. Thanks for joining us. Appreciate it. That is the latest when it comes to economic news and, of course, what we learned about the Federal Reserve earlier today. Let's now go to Washington for the latest from the Capitol, where a key House committee on Friday failed to advance House Republicans' massive tax and spending bill. This after hardline conservatives bucked President Trump and blocked the bill over cost concerns. We got Joe Matthew with us. He's co-host of Bloomberg Balance of Power. He joins us from our Washington, D.C. bureau. Joe, Representatives Chip Roy, Ralph Norman, Josh Brecken, Andrew Clyde joined Democrats to vote against this. What happens now?
Yeah. Well, that's a great question, and that's the one we're all asking. This happened right around noontime. Tim, it's great to be with you today. And, you know, you're going to hear a lot of people speculate about the fate of this bill based on this failure. And I won't try to do that right now. What I will tell you is this is not the way it's supposed to be done. This is the easy part. Getting through committee is like the layup, the rubber stamp, and it's incredibly rare to see something fail on this level. The fact that the chairman, Jody Arrington, even brought this to a vote, clearly knowing that he didn't have the numbers, is remarkable. You mentioned Chip Roy, Ralph Norman. These are frequent critics of legislation on Capitol Hill that doesn't cut spending enough, and they know what it's like to get a phone call from Donald Trump. So a couple things can happen here. Yeah. And you know what? Yeah, he's on the plane right now, by the way. I don't know if he's taking a nap, Tim, or if he's actually on the phone with them, but this could be a pretty dicey weekend for these guys as they try to put the pieces back together.
Well, that's exactly where I wanted to go, Joe, because we saw what happened in the last several months when Republican members of Congress have not gotten on board. All it takes is maybe a phone call or two from the president, perhaps even maybe from some of his allies or from Speaker Johnson. What's the president's next move here? What political capital does he have to push these guys to get on board?
Well, it's a great question. He was on Truth Social earlier today saying, stop talking and get it done. He was referring to the grandstanders, as he likes to call them, the names that we've already used here. The vote was 21-16, so you've got more than a couple Republicans to convince here, but there's a lot of moving parts. When you're trying to find balance in something like this, and the whole matter of SALT that we talk about a lot here on Bloomberg is right in the middle of it. If you're going to make the New York Republicans happy and raise the cap on SALT, you're going to upset other people who want to see steeper cuts to make up for that. And that's the balancing act that Speaker Johnson is in right now. He clearly hasn't found the balance. But just to give you a sense of what this means, we had the Budget Committee today. It was supposed to go to the Rules Committee on Monday, which is kind of the gatekeeper to the floor. And then, as the Speaker promised, a vote on the floor by Memorial Day. They're not going to fool around with that Memorial Day break. Everyone's going home one way or the other. So this whole timeline could suddenly be off the rails. When you consider what's coming in terms of the debt limit and so forth, it could be a complicated summer, one that was already complicated. It could be even more so.
Okay, so everyone's not going to be there voting on this on Memorial Day, Joe. So what do we know about just exactly what happens next with the timeline here?
Well, they'll probably get a couple of boos when they're in the Memorial Day parade if people are actually paying attention at home. But we have to remind ourselves, this is the signature piece of legislation for the Trump administration. This is what he calls one big, beautiful bill. This is to extend or make permanent the Trump tax cuts. Think about the promises on the trail. No taxes on tips, no taxes on overtime. We already went through SALT. They kind of have to get this done. And when we find out in a couple of weeks what the real X date is on the debt ceiling, that's going to be maybe the gas on the fire that gets people together. The fact of the matter is, though, I'll make this even more difficult. Once all this is potentially done in the House, it goes to the Senate, and they're going to rewrite the whole thing. They're going to make all kinds of changes and probably turn back some of the cuts that were made to Medicaid to pay for some of this stuff. And all these same guys in the House who didn't like this bill today will like it even less then. And then where are we?
Well, Joe, while you're talking to us, Kaylee's sending us tweets. This one coming from NBC News reporting that the House Budget Committee Republicans are going to try to reconvene on Sunday at 10 p.m.
Oh, that'll go well.
So, yeah, so what happens between now and then?
They don't have bedtimes.
They had a couple of overnight committee hearings already this week, like 16 hours long. They had lawmakers falling asleep at 4 a.m. They're good at this. It's high drama. They'll bring in the takeout and the wine and maybe the cots, and it'll make for great TV on Monday morning. Whether they can actually get anything done, though, we saw them bring it to a vote today without being able to answer that. So what changes in the next couple of days, aside from some arm twisting from President Trump? I don't know.
Hey, Joe, before we let you go, we got about a minute left. We wanted to talk to you also about takeaways from President Trump's overseas trip, 4 days in the Middle East, the tour that really focused on making deals. How would you just describe for us the view of this region by this administration and how it differs from previous administrations?
We talked to former Congressman Denver Riggleman about that today. He joined us live on Balance of Power from Dubai. He's actually founded an AI company of his own, and he's in the mix over there. And he was talking about this incredibly important moment as this region is opened up to the likes of NVIDIA, AMD on the friendly list, if you will, when it comes to high-tech chip exports. This is an incredible moment of opportunity, I think, not only for the administration, but for the industry here as we look for options to turn away from China. Pretty incredible, the dollar figures that we saw announced on this trip. And it's also a whole new look optically at what a presidential trip can look like here, leading with the dollar signs and kind of backstopping with the politics. I'll say one thing, though. Nobody got to Turkey today named Trump or Putin for Ukraine peace talks. That was something we were holding out for, and it's not going to happen this time. That will remain on a lower level.
Okay, well, thanks for the update, Joe, from Washington. Really appreciate it. I want you to get some rest this weekend because I know you're going to be busy following all the happenings in Washington, D.C. Also, don't miss Joe and Kaylee tonight at 5 for the late edition of Balance of Power. In case you missed it, our latest Business Week Daily podcast features Lifeway Foods CEO Julie Smolansky on what she's calling a hostile takeover attempt by dairy product maker Danone. Get it at Bloomberg.com.
Everything you love about Bloomberg Radio is now inside your car. The new Bloomberg Business app featuring Apple CarPlay and Android Auto. All your favorite Bloomberg Radio shows right on your dashboard. Download it free in the Apple App Store or on Google Play.
From May 20th to 22nd, world leaders and international CEOs will gather in Doha for the 5th Qatar Economic Forum powered by Bloomberg. Held in conjunction with our official partners, Qatar's Ministry of Commerce and Industry and Media City Qatar, culture sponsor, Qatar Museums, innovation sponsor, QRDI Council, and premier sponsors, Qatar Investment Authority and QNB.
Imagine home. The smell of coffee, the sound of a lawnmower, the sun's warmth on your face. Free to be yourself, surrounded by love that helps you grow. This is a place to call home. That's an American dream we all deserve. But in 50% of U.S. states, you could legally be denied housing if you are LGBTQ+. Get the facts and hear real stories at lovehasnolabels.com. Brought to you by Love Has No Labels and the Ad Council.
On a recent edition of the Big Take podcast, President Trump's plans to monetize the Middle East. Bloomberg's Jumana Persecci joins host David Gura to unpack the biggest headlines from the president's tour of the Persian Gulf.
Let's start with the deals. A $600 billion deal from Saudi Arabia, deals with Qatar valued at more than $200 billion, and talk of a broader economic package to the tune of $1.2 trillion. How much of this is real? How much of this is sort of newly signed deals versus agreements in principle?
$600 billion was the headline figure that the White House put out after that bilateral meeting that took place between the Crown Prince and President Trump. Later on, Crown Prince MBS in a speech said that they're working to increase that figure to $1 trillion. Of actual deals, though, from what we understand, the nominal amount was $300 billion, and a lot of that was announced at this Saudi-US business forum that was being held in parallel. So many CEOs and industry leaders, at Citi CEO Jane Fraser, you had BlackRock CEO Larry Fink, you had Jensen Huang from NVIDIA. Those individuals all descended on Riyadh for that conference. And on the back of that, we did get some signature deals. One of them is the largest defense deal in history for the White House. Again, a $142 billion defense package in which Saudi Arabia has committed to buying arms from the United States. Also, a lot of energy MOUs, Aramco doing about $80 billion worth of partnerships with U.S. companies. You had that big headline figure of $1.2 trillion. That was, quote unquote, economic agreement. But actually, in terms of what is firm, we understand that number to be closer to around $240 billion, of which Qatar Airways has placed a firm order for up to 210 Boeing jets. And that amounts to about $96 billion in nominal value. That is the largest order that Boeing has ever received.
That's what's on a recent edition of the Big Take podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. 5 days of gains for the S&P 500 index, on track for the second best week in 2025. The Dow, the S&P, NASDAQ, all higher, with the S&P up 29 right now, up by about 0.5%. We got the Dow up 265, up 0.6%. NASDAQ up 60. That is a gain of 0.3%. The Bloomberg Mag 7 index up by 0.2%. 10-year 4.43%. The 2-year 3.97%. Gold is slumping 1.6%, 31.87 the ounce, and West Texas Intermediate crude up 1.4%, 62.46 for a barrel of WTI. Charter Communications has agreed to combine with closely held Cox Communications. Charter up by 1.3%. They're on picket lines instead of the railroad lines. New Jersey Transit locomotive engineers started striking this morning. This strike involves all 12 of NJ Transit's commuter rail lines, though the system's buses and light rail service continue. Recapping, S&P up 28, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Well, President Trump said on Thursday that India has made an offer to drop tariffs on U.S. goods as the nation negotiates a deal to avert higher import taxes. We know our next guest is watching this closely. He's featured in the upcoming weekly CFO Briefing newsletter. It's written by Nina Tretman. She's Bloomberg News senior editor. You can also sign up for it at bloomberg.com/CFO-briefing. Nina joins us now along with Kabir Ahmed Shakir, CFO of Tata Communications. Nina, I want to start with you. Why did you choose to feature Kabir in the upcoming CFO Briefing newsletter?
Well, it seems as it's good timing, right? India is in the news. We've also seen a fair amount of tensions recently between India and Pakistan. So we're also talked about risks to Kabir. So yeah, it seemed to be a good time. Kabir, thank you very much for staying up so late. It's, I think, around midnight in Mumbai. So thank you very much for joining us. We've just heard from Tim on the outlook for India. Just wondering what that means for your business as you're growing your business at Tata.
Thanks, Nina and Tim, for having me on the show. Yeah, I know it's almost going to be midnight here, but quite excited to be on the show. As we spoke, earlier as well, I'm cautiously optimistic about what the year will unfold for us. We are working tirelessly on our strategy and executing on our strategy. And of course, business is not ever going to be static. The environment is going to keep throwing challenges at us. But I guess we have a resilient business. We are in the B2B space, and we are here to serve our customers. And our products and services help our customers both on the revenue side and the cost side outcome. So managing volatility, helping them grow, helping them manage their bottom line and their risk is what we do day in and day out. So I'm excited to continue to partner and help our customers.
I'm curious about how tariffs specifically affect you. Even though you're based in India, you're a global company. You essentially connect 80% of mobile customers worldwide. You serve 300 of the Fortune 500 companies in some way. But tariffs affect products, hardware, infrastructure, technology. How would tariffs affect your business? How do they affect your business?
Well, there are two ways in which it could affect our business. One is directly, because we are in the telecom space and we do procure hardware equipment, which we deliver as part of the overall service to our customers. So it does impact there, but that impact is very negligible and insignificant. So I'm literally not worried about the direct impact. What worries me is even so much so not the tariffs, but the volatility, the uncertainty leading up to it. So from the time President Trump announced, and then there was a pause, and now there is a bit of a withdrawal. So we don't know when this turbidity is going to stop and when there's going to be more clarity. So when we see this uncertainty with our customers, the delay in decision making is something that is likely to push revenue out. Although as of now, I have not seen this in our order book as yet. And that's the reason why I use the word cautiously optimistic, right? That we would like to be cautious to see what's that conversation that's happening in our customer boardrooms and how we can, help them.
Maybe I can jump in here, Kabir. Just thinking about the relationships between India and the US, I'm wondering how you're seeing additional growth opportunities for your business. I know you've told me the US is an important part for your business. You've done 2 transactions here recently. Just talk to us a little bit about how you're seeing that develop.
Yeah, US is a very, very important market for us, and we want to grow US to $1 billion of our business. We are currently about a little under $2.5 billion dollars for now, and US kind of totals up to around 750. So we would like to take it to $1 billion in the very near future. So we've invested both in terms of product capabilities for the business, go-to-market capabilities, feet on street, and everything that we can do to grow the business. So therefore, our strategy is still steadfast. And we will look for both organic and inorganic opportunities to grow our footprint in the US. So we are committed to that.
Kabir, what is the M&A outlook like? Because at least in the US, we had a pretty big media deal announced today with Charter and Cox. Are you looking at any potential M&A activity?
We are continuously scanning, if I may, and there are targets that we'll look at. If you look at our business, our data business has 2 chunky parts. There's a core connectivity part of the business, our traditional telecom point-to-point connectivity, and Ethernet, and international lease lines, and the entire submarine cable that we have. So that's roughly about half of our business, and the other half is the digital portfolio, which we call the overlay services, where we use the connectivity as a foot in the door and then provide value-added services to our customers, whether it's the customer interaction, suite offerings that we have, whether it's IoT, Move, cloud, security, and all of those offerings that we do. It is in that space that we would be really looking for any potential targets that could either, I would say, bolt on and fill any portfolio gaps I may have in my product offering, or even help us with the go-to-market, offering. I'll give you a recent example. When we bought Switch, and it was primarily a US-based business. Switch gave us 2 capabilities. One, it gave us the media transmission business in the US, and that was very, very, important for us. Plus, it also gave us the media production, capability, so we could backward integrate and offer more product offerings to our customers, and we could take that globally as well. So it made a lot of sense for us to get a footprint in the US geography and then use that capability to even go global. So assets like that will be of interest for us, and we continuously scan for them.
Yeah. Kabir, just wondering, based on the fact that you're based in India. We've seen some geopolitical tensions there recently. Not the only place in the world where we're seeing that flare up recently. Just wondering, from a CFO perspective, how do you navigate these kind of geopolitical risks, and how far has risk management become more important to us, to you, and also sort of how does that work?
Nina, I mean, I would say we have a very, very robust risk management framework. And today it is geopolitical risk. Yesterday it was something called COVID pandemic. And not more than a decade ago, it was a Lehman collapse and the crude oil crisis. So we've seen, and every time when this event happens, we call it a one-off event, a black swan event. But I guess all organizations, sail through this. They have a resilient P&L and balance sheet and resilient culture that helps them navigate through this. And we are no different. And we are a global organization. So therefore, we are not insulated to only domestic, issues. Every morning we wake up with something happening, across the world. The geopolitical, conflict, as when we spoke, I mentioned, it never has ever happened that we had 3 cable systems go down at the same point in time in the last 20-year history ever, which happened about 9 months ago. And that's because of the Red Sea conflict that you actually see. So we have woken up to the reality that despite these pressures, we need to continue to be, serving our customers, providing them, diverse paths, giving them alternatives, so that their business, keeps running. That's the reason why they come to us in the first place. So when we chalk out plans, we of course look at the likelihood and the impact of any of these events occurring. And depending on the severity, either we are acting on them right now, having a plan A, plan B, plan C ready, or if not, keep watching that space if it develops in any way disadvantaging us, and have mitigation plans.
We're speaking with Kabir Ahmed Shakir, CEO of Tata Communications. Kabir, you have this perch as CFO of the company that operates, or has business, I should say, in close to 200 countries around the world. So you understand where there's weakness, where there's strength. What are you hearing from customers right now? This isn't exactly discretionary spending that they do when it comes to IT, when it comes to telecom. But are there areas of the world where you're seeing strength? Are there areas of the world where you're seeing weakness right now?
Yeah. Look, when we look at any of these things impacting, like the tariffs, of course, there's a prediction that it will be slowed down, especially in the US. The very recent Goldman Sachs report of last month suggests that spend levels are going to be pretty static compared to last year. So, and the probability of capex coming down is as high as 45%. So you see all those, statistics coming in, and I can understand why, because of the uncertainty. And if customers need to rewire their supply chains, then they would rather preserve the cash for that than, spending on important but non-urgent, IT spends. So that's one dilemma. The other conundrum that they actually have is clearly there is a FOMO. I mean, with the buzzword of AI going through, every organization is also looking at, are we investing in AI? And are we future-proofing our business? So therefore, not investing and not spending on that space is not an option either. So that's the kind of conundrum that the customers are in. And we are helping our customers to look through this, bring clarity as soon as possible, so that they do not, suffer the consequences of an indecision on and not spending in time. So it's a tricky situation. So I'm not saying it's easy. But you see that consistently across, industries. Quite often with network, it so happens, Tim, is if it ain't broken, why fix it? That's the kind of attitude, people have. So it's very normal to try and push back that spend. But as I said, with AI coming in, it's very difficult for them to push back for too long.
Yeah, certainly a theme that we saw when it came to the most recent round of earnings reports from companies here in the US, that AI spend is continuing. Kabir Ahmed Shakir, thanks so much for joining us, CFO of Tata Communications. Also a big thank you to Nina Trentman, Senior Editor at Bloomberg News. Check out the CFO briefing by Nina Trentman. You can sign up at bloomberg.com/newsletters or go directly there, bloomberg.com/CFO-briefing. Let's get an update on the trade, because we're seeing stocks move a little higher. Here he is, Charlie.
All right, I thank you very much, Tim. Indeed, I'm just pulling up the weekly numbers right now on the Bloomberg, and for the week so far, we got the S&P 500 index up by 5.1%, second biggest week of the year. But you care about what's going on right now. We have got the Dow, the S&P, NASDAQ solidly in the green, just about the best level of the day on the S&P 500 index. Stocks are gaining. Wall Street's hopes of a cooling tariff war drove stocks to their second best week in 2025. S&P 500 index up for a fifth straight session. So here's where we stand. We've got the S&P up 31 now, up 0.5%. The Dow up 283, up 0.7. NASDAQ up 0.3. The 10-year 4.43%. The 2-year yield 3.97%. Gold down 1.5%, 31.90 the ounce, and West Texas Intermediate crude up now by just about 1.5% on WTI. So bottom line here, it is an update for the Dow, the S&P, and NASDAQ. Briefly, Verizon Communications has won FCC approval for its $9.6 billion acquisition of Frontier Communications Parent Inc. after agreeing to pare back diversity initiatives. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Today is a big day. It's not just because I'm told there's some sort of big basketball game tonight. It's also the premiere of a new podcast from the team here at Bloomberg Business Week. It's called Everybody's Business. It's a smart and fun chat show about all the things business, hosted by award-winning business and economics journalist Max Chafkin and Stacey Vanek Smith. They join us here in our Bloomberg Business Week studio. They need no introduction, but I'm going to give them one anyway. Max is also senior reporter for Bloomberg News. Stacey Vanek Smith is senior editor of Bloomberg's daily Big Take podcast. Max, there are a lot of podcasts out there. There are a lot of podcasts about business. How did you approach this to differentiate it from everything out there?
Well, we just wanted to, obviously here at Bloomberg, we spend a lot of time following the market very closely, talking to corporate insiders, really telling that kind of high level, big money story. And, we wanted to kind of touch on the stories that the way those things affect regular people, affect the decisions we make to get a new job, to what to do with our 401k, and all the stuff that's happening right now in the news, whether there's a 145% tariff or a 30% tariff or whatever on China, or what's happening with AI, all of that matters in our everyday lives. So that's the connection we're trying to make. But mostly, Stacey and I just wanted to kind of like have some kind of loose conversations with some smart journalists that we know. And so that's part of what it is as well.
Stacey, what can we expect out of the podcast? What's the kind of like intended listener experience here? This is something you listen to on your commute. This is a longer podcast. Give us all the technical details.
We would like you to listen to it wherever you want. But the idea is really that it connects the dots between some of the economics news that we hear, some of the headlines, some of the policies that we hear, tariffs and things like that, and then connecting it back to how that might affect our day-to-day experience going to the grocery store or running a business, or kind of personalize the bigger things that are happening.
I guess, Max, what I like about this approach is you're also leaning heavily on the folks in the building, the folks outside of the building who are part of Bloomberg News, folks like Amanda Mole, Randall Williams, and more out there. Talk a little bit about sort of thematics for the week. I mean, it's kind of tough to boil everything. Like we're doing this every day for 3 hours, and there's
I don't know how you do it.
Well, there's too much. We don't run out of anything to talk about. You guys have to do this once a week and choose what to distill down into something that's digestible.
Yeah, so we talked about, like this week, for example, we spent about half the show talking to Amanda Mole, who you mentioned. Amanda is an expert in kind of consumer, basically buying and branding and what happens inside of stores. And the thing we wanted to explore with her was, on one hand, you have all this news about tariffs. On the other hand, prices actually haven't really gone up much yet. And what's happening there? When are they going to go up? And I mean, the answer, we explain this, is they're going to go up very soon. And this is going to be a difficult holiday season, even if Donald Trump backs down from the tariffs even further than he already has.
Stacey, you don't have to spoil it because we want everyone to listen to the podcast, but it's going to feature an underrated story for the week. Give us a little hint.
Well, my hint is that my co-host, Max, is an ultra marathoner. He runs these incredibly long races that are 100 miles. He runs like through forests through the night. And As it turns out, there's quite an interesting business story connected to this, having to do with athletic shoes. And the soles of athletic shoes are sort of getting bigger and bigger. This has been kind of a trend.
Oh, yeah.
Well, it started in the ultramarathoning community, and now it's causing a controversy because races are trying to put regulations in place on how high shoes can be. But the shoe companies are pushing the envelope, and customers like bigger soles.
I've also wondered how Max trains for these things because he's a busy guy. He's got a few kids.
I know.
He has a lot of work to do, but I found the secret. He just runs to and from the office.
I have a working theory there might be at least 2 Max Chapkins, but I don't know. I don't have any evidence.
Okay, so the weekly cadence here, we get a new one every Friday, Stacey. The premiere is today. If you think about the sort of the cadence moving forward and the big themes, obviously we talk a lot about everything happening out of Washington and emanating from Washington. That is a business story. Everything that Elon Musk is doing is a business story. What's the theme, in the coming weeks? Like, how do you know what it's going to be?
Well, we don't. This has been quite an intense news cycle. I think huge stories kind of come out of seemingly nowhere very often. A lot of the business news isn't quite as organic as maybe it used to be, where we would see trends coming from far away. I think a lot of these, because they're anchored to policies that are changing out of the Trump administration and things like that, often you just have to stay really loose. I'm sure you both know this better than anybody. The news really changes by the hour right now.
Guys, I'm looking forward to checking it out. A new one drops every Friday. Get it at Bloomberg.com or wherever you get your podcasts. It's called Everybody's Business, and the premiere is today. Max Chafkin, Stacey Vanek Smith, co-hosts of the new Everybody's Business podcast. All right, well, we are watching all the economic data that we are getting very closely, including real estate data. Housing starts increased in April as a pickup in multifamily home construction more than offset a decline in single-family dwellings caused by elevated inventory. Back with us is Katie Hubbard. She's Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got about $4.4 billion and nearly 81,000 acres of land under management in the U.S. Katie, always good to have you on the program. If you think about where we are right now versus where we are when we last spoke to you back in March, what is the biggest shift that's taken place from your perch?
Yeah, Tim, thanks so much for having me. I would say the biggest shift is just weak spring selling season. Typically, 37% of all sales by public home builders are made in February through May, and they just have not had the traffic. And it's really because of elevated borrowing costs that we're seeing. Mortgage rates are still high, and then the uncertainty in the economy is keeping people from shopping.
Katie, I want to get your take on the economic data that we got out today, housing starts. Because I'm looking at it, we have multifamily home construction, like apartment buildings, jumped, but then single family home construction decreased. What do you make of this divergence? What is that telling us about the overall housing economy right now?
Yes, I mean, the public home builders are really doing what they can to protect their balance sheet, so they're not wanting to overbuild with the weak spring season. So they've really pulled back on their housing starts. Typically, they're going to be starting about 3 homes per community across the nation, and you're at less than 2.7 homes per community. So they're just building less because they don't want to be stuck with inventory that they can't sell. Because when they have inventory sitting there, they're having to slash prices to keep the units going. And then there just continues to be a pent-up demand in the rental market because of the lack of affordability in the single family market. It's keeping the developers hungry to build and on the multifamily.
Katie, let's go big picture and talk about a theme that has emerged over the last few years and especially emerged during this last presidential election cycle. And that has to do with housing affordability, housing availability. You touched on it when you talked about rental and home prices as well. Are these homes going to get built in places where homes don't traditionally get built? I mean, that was one of the ideas that was presented during the campaign by Vice President and then candidate J.D. Vance, was building on federal lands. In your view, is that how the U.S. is going to tackle this housing problem?
That is a great question. So we're just coming off of the ULI conference where they're talking a lot about affordability and how we're going to be able to build homes that not only are affordable, but also attainable for people that aren't looking for, affordable homes with government assistance. Really what's happening is developers are moving out into further out into the suburbs where they can build and the land is more affordable. The challenge then, of course, then you don't have the utilities availability. So you don't have water, sewer to be able to build big master plan communities. Herein lies the problem with the government. Yes, does own 500 million acres of land that they could just say, hey, you can build on this, but then you have to have public-private partnerships, and it has to be a win-win where everybody along the value chain can make money. And then if you look at the land that the government owns, it's the wrong land in the wrong location without the availability to actually build on it. Physically, you can't build. And then the people who would be potentially living in places where the government owns land, we're talking, the desert, the mountains, there's no jobs there. So it sounds good, but it's just not a viable option.
Yeah, I heard there are 3 things that are important when it comes to real estate: location, location, location. I've heard that before.
Right.
So then is the answer in upzoning or rezoning? Is the answer in changing local laws in municipalities to allow more dense homes and perhaps getting rid of parking requirements and really concentrating on areas where the economic activity is and making sure that people can find available housing in these areas? Is that the key?
That really is. We need deregulation to make permitting easier, to make the densities better for developers so that they can make their numbers pencil. The challenge is just in those urban core areas that we're talking about, there's not a lot of availability of land. And I'm sure if somebody came, wanted to build an affordable multifamily development on a park in your neighborhood, you wouldn't want that. So you've got, the not my backyard mentality. At ULI, they were talking about now they've got a YIGBY, yes, in God's backyard, where they're actually looking at taking religious institutions that maybe are abandoned or not being utilized and putting affordable housing in there. So there's a lot of, discussion about ways to make it work. And one of the ways is through just engineering, being able to build homes at a faster pace through engineering. So that is coming. I would say if you've looked at Boxable, that's, where you can unfold a house in 3 days, doing that on a larger scale with bigger buildings.
I'm wondering how tariffs and the trade war impact that, what you're talking about specifically, like the speed at which home builders can actually build and source raw materials. What are you seeing right now about how tariffs are impacting the housing supply chain?
Yeah, so today it's actually better than we thought. The pause on the tariffs has helped. Right now, you're looking at about 2 to 4% that has actually impacted the building costs today, and home builders just are not passing that on to the end users. They were anticipating a 6.8% increase in materials this year, but it's actually been less than expected.
What's the biggest issue? Is it lumber from Canada? Is it gypsum from Mexico? What is it?
It's all of the above. It's, you've got steel, you've got appliances coming from China is a big one. The houses that they're building today, they have purchased materials in the past. So it's really looking forward. And that's another reason why they've slowed down their starts, is because they don't really know what the prices of those goods are going to be for those future homes. And we really need that to stabilize across the board. But yeah, it's all of the things that you mentioned, Tim.
Katie, what have you heard? And, we talked about this a few months ago, but I want to get an update from you on this. What have you heard recently from the home builders about labor, especially with regard to the immigration crackdown that we've seen in the U.S.? Are home builders finding enough people to work for them? And then are their subcontractors finding those folks too?
Yeah, what's interesting is that they're not really reporting a shortage in labor. They're actually having some of their trades contact them and asking for more work, just because there has been a slowdown in construction across the board. So that has not really affected them that much yet. Where you're going to see that affect the market the most is in the 50 unit and below multifamily market, because the people that are now not immigrating to the US or have left are typically the renters that are renting those smaller multifamily houses.
Before we let you go, we have just about a minute left, but I have to ask about mortgage rates, because Trump has been pressuring the Federal Reserve to cut rates faster. Does the housing market need an acceleration in the path of cutting rates? How much do we have to see rates come down?
I mean, definitely the sweet spot is sub 6%. There's so many people that are on the sidelines, waiting and hoping, hearing that rates are coming down. Even when the Fed does cut rates, though, that doesn't typically affect the 30-year fixed. It's really tied to the 10-year Treasury, and that is really tied to inflation. So sticky inflation is keeping the 10-year high. At 6.78 is the 30-year fixed today. We really need the 10-year to get down to about 3.78 for the rates to hit below 6. So we don't see that happening this year or next year. But that would definitely help the market.
Katie, always good to check in with you. Appreciate you taking the time and joining us on this Friday afternoon. Katie Hubbard, she's Executive Vice President of Capital Markets over at Walton Global. A reminder, they've got about $4.4 billion and 81,000 acres in land throughout the U.S. under management. Taking a look at markets, we're still seeing equity markets higher on this Friday, 0.6% to the upside on the S&P 500. Coming up next, some of those stocks that are on the move. Bloomberg.com is a brand new game for you. It's called Pointed, the news quiz for risk takers. Use strategy and savvy to navigate trivia questions about the week's news and markets, politics, luxury, and more. Bloomberg.com/pointed.
Global market news changes in an instant, so don't miss a minute. Listen to Bloomberg Radio anytime, anywhere around the world on the iHeartRadio app. Tune in, the Bloomberg Business app, Sirius XM 121, and the Bloomberg Terminal.
This is a Bloomberg Money Minute. Tariffs are weighing on the minds of consumers. The latest University of Michigan Consumer Sentiment Index fell in early May to the second lowest level on record, with expectations that prices will rise to an annual rate of 7.3%. That's the highest since 1981. The so-called Ozempic revolution has wiped billions from the market values of food and drink companies, but meat giant JBS says demand for chicken and beef is getting a boost from the GLP-1 drugs. The CEO says people using those medications seem to be adding more protein to their diets as a way to maintain muscle mass. While fast casual chains Sweet Green and Chipotle Mexican Grill are seeing consumers pull back, one of their rivals is doing just fine. Cava says its sales rose in the first quarter, with established restaurants seeing growth of close to 11%. Stocks are up between 1/3 and 0.6%. I'm Nancy Lyons, Bloomberg Radio.
From the state courts
Tell us a little about the facts of the case.
to the Supreme Court,
Can Congress force a judicial code on the justices?
June Grosso delivers your legal intelligence.
Multiple lawsuits were filed against the emergency rule.
The Bloomberg Law Podcast.
Is the toughest hurdle for prosecutors proving Trump's intent?
Listen live weeknights at 6 Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app or anywhere you get your podcasts. Bloomberg Podcasts. Context changes everything.
How is Africa riding the crypto wave? Why are record coffee prices a double-edged sword? And what do China's economic woes mean for African debt? I'm Jennifer Zabasaja. Join me for Next Africa, a podcast from Bloomberg that offers a weekly dive into one business or economic story from across the continent. Listen to Next Africa on Apple CarPlay or Android Auto with the Bloomberg Business app or wherever you get your podcasts.
Get the news you need to start your day in just 15 minutes.
The U.S. and China have agreed to cool off their trade war.
The latest developments in the war in Ukraine.
Wake up with Bloomberg Daybreak U.S. edition.
Israeli forces have taken over large areas of Gaza.
Aaron Judge, yet another home run.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
President Trump pushes higher taxes for the wealthy.
Subscribe to Bloomberg Daybreak U.S. edition on Apple, Spotify, and everywhere you get your podcasts. Bloomberg Radio. Context changes everything. This is Bloomberg Business Week Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Emily Grafeo in for Carol Masser on this Friday, May 16th. We're seeing the S&P 500 pretty much at its best levels of the day, up 0.6% right now. We're also seeing at or close to session highs, the NASDAQ composite up close to 0.5 percentage point. We'll go ahead and call it 0.4%. The Dow, Emily, up 0.7%.
Yeah, pretty much all across the board. Risk assets higher. Treasury yields kind of quiet, but maybe they're already ending out the week. The bond traders have left already.
Yeah, and what a week it's been, at least for the equity market, shaping up to be one of the best weeks of the year.
I'm Emily Grafeo, along with Tim Stenivek. Let's take a look at some stocks on the move today. With us is Denitsa Sakova, cross-asset reporter at Bloomberg News. Denitsa, you're looking at a popular company here with anyone who works in an office in New York City and
Yes.
likes to eat lunch.
We're talking about lunch and we're talking about Kava. And I personally really like them, but they're having a pretty bad day. They dropped as much as 6%. Now they're down about 3%. The losses are coming after earnings report. That was a good earnings report, but analysts are saying it doesn't just justify their hefty valuation. So it's interesting. That's obviously a very competitive place, a very competitive space. There is Sweet Green. There are all those brands. Kava is not necessarily the most expensive. Sweet Green is more expensive. Kava raised their prices about 2% earlier in the year, but they still remain a little bit cheaper than competitors. We saw some good news in the report. Sales at established restaurants grew. We saw some very important metrics of earnings growing. One thing, Kava has been outpacing competitors in the recent quarters. So expectations have been quite high going into this report. Perhaps one reason we're seeing some disappointment. The stock is actually down 15% this year. Of course, this comes after a 160% surge last year. But definitely this earnings report is not adding too much optimism for analysts.
That stock is still up 125% since IPOing.
It is.
It's incredible.
However, if you go back and look at the 1 year chart, then you go back to the highs of December of 2024. So not even that long ago, it's still down about 36% from then.
All about timing.
$11 billion market cap.
Yeah.
The food is good.
Yeah, they still don't have one near our office. I'm just throwing it out there.
Yes, that's true. But their dips are amazing. But yeah.
But we digress. Okay.
We digress.
Let's talk crypto.
Let's talk about Coinbase. What a week it has been for Coinbase. I feel in terms of news stories, it's probably like a 1 year cycle in a week.
Right.
So the stock is actually up about 9% on Friday. And if you look at this week, if you zoom out, I love that stat. The stock is up more than 30% over the last 5 sessions, which is the best weekly gain since President Trump re-election. So the week started with a lot of bad news. We had the news about the hack. Then we had an estimate that is going to cost about 400 million. We know hackers gained access to customer data, names, dates of birth, all those super sensitive information. There are a lot of investigations and things going on. But there is a lot of concern with that. We also had a confirmation of reports that U.S. regulators were investigating the user figures the company quoted before their IPO. So obviously, all those things away from this, the company is joining the S&P 500. This is obviously a massive milestone. It's happening next week, and that's clearly boosting the stock, adding a lot of optimism. Of course, the index effect, Emily was writing about it, but it's an important thing to launch going forward. All those passive money mutual funds tracking the stock, that's a big boost.
It is.
That could help.
That helped earlier this week in the single day stock move, which was more than 25%.
Yeah.
What I found fascinating, you don't see that every time a company is added to an index.
Right.
It's not, you don't always see a bump like that. I mean, why would you see a bump like that with this time, but not necessarily other companies?
I think Coinbase is such a well-known name within the stock market, because sometimes the companies get added to the S&P. No offense to them, but it's like, I don't hear that name. Coinbase, you see the ads. They have Super Bowl ads. They have obviously like a big popularity with anyone who's trying to buy crypto in the US. A lot of them use that exchange. It's a very like user friendly, familiar company. So maybe that added to the market action.
I totally agree with you. Also, it's a risk on week. Everything is rallying, all the risk on currents of the market, crypto. So that's also a stock that's driven by sentiment.
Okay, 30 seconds left for applied materials.
Last one. It fell as much as 7.3%. It came off a lackluster forecast for the current period. Of course, we're talking about the trade war. Of course, we're talking about China there. Of course, in the last 2 weeks, there has been so much back and forth. But what we're seeing now is China accounted for 25% of applied materials sales last quarter, which is down from 43%. So a really big drop there. And obviously there is a lot of volatility. This is currently the largest American maker of chip maker gear. And it's likely going to be impacted by all of those restrictions we're seeing on sales to China. The company is still up 2%. So we're yet to see if the drop yesterday, if the drop today is going to hold. But a tough day today.
Denita Stakova, cross-asset reporter for Bloomberg News. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Coming up next on Bloomberg Television, it is the close. If you're just sticking with us right here on Bloomberg Business Week Daily, we got the mayor of Fort Worth, Texas. We're also talking the big telecom cable deal as well. That's next.
Bloomberg Radio brings you influential voices on the stories that matter. U.S. Treasury Secretary Scott Bessent.
We are deregulating across all industries every day.
J.P. Morgan CEO Jamie Dimon.
I think there's a lot of uncertainty out there that you can't discount.
Citadel CEO Ken Griffin.
It's been a really difficult time for fundamental investors.
The names that matter on the news you need. Listen on Bloomberg Radio or anytime on the Bloomberg Talks podcast.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
This is CBS News on the Hour, sponsored by the Freedom from Religion Foundation.
I'm Heather Bosch. No deal. Conservative Republicans in a House Budget Committee voted down a package of tax breaks and spending cuts. CBS's Torianne Small explains.
Representative Chip Roy was one of the leading members defecting with the party because he believes these spending cuts aren't deep enough, especially as it relates to Medicaid. That's a big issue for quite a few moderate Republicans who had concerns that it would negatively impact their constituents.
There's concern millions of Americans would lose health care. A manhunt is underway in New Orleans after a jailbreak.
Jail guards discovered the escape when they came up 11 short in a head count around 8:30 Friday morning, said Sheriff Susan Hudson.
Our top priority right now is the safety of the public and returning these individuals to our custody without delay.
But New Orleans Police Chief Ann Kirkpatrick said it took the sheriff's office 2 hours to notify the NOPD of the escape.
When we learned about it, we knew the immediacy to at least inform the public.
Chris Miller for CBS News, New Orleans.
Cleanup is underway after storms pounded the upper Midwest. CBS's Lana Zach is in Wisconsin.
Several communities are all pitching in to try and get power up and running to help with the cleanup. All of these new power cords up here have been put up since we've been here this morning. Earlier, the power lines were strewn throughout Main Street here, just as a sign of how quickly everyone is working.
Before the next round of severe weather hits. In Maryland, a judge is hearing arguments on whether the Trump administration can keep details about a mistakenly deported man secret. Kilmar Abrego Garcia was among migrants sent to a prison in El Salvador. CBS's Jake Rosen.
Attorneys for Abrego Garcia have accused the Department of Justice of stonewalling. It's really been a lot of similar arguments, both in this case and a number of other ones involving these men who have been sent to Salvadoran custody and Salvadoran prisons.
The judge previously ordered Abrego Garcia's return. A young Tennessee gamer is credited with stopping a Northern California school shooting after seeing 2 teens discuss the plan in a gaming chat room. Sheriff Dave Kane.
The suspect went on to talk about having a manifesto and a plan to target a Tehama County school. The suspect also sent photographs of himself and an accomplice to the reporting party in the same attire and pose as the Columbine school shooters.
New Jersey Transit train engineers on strike.
What do we want? Contract. When do we want it? Now. What do we want? Contract. What do we want?
Thousands of New Jersey and New York City commuters are scrambling to find other ways to and from work. The engineers want higher pay. This is CBS News.
The Freedom from Religion Foundation, the nation's leading group working to keep religion out of government. Go to ffrf.us/freedom or text protection to 511-511. Text fees may apply.
In America, personal religious beliefs should be just that, personal. But today, Christian nationalism is on the rise, threatening the separation of church and state. Laws are being passed based on religious doctrine instead of reason, eroding our rights and freedoms. In legislatures, public schools, and even courtrooms, one set of religious beliefs is being forced onto everyone else. But that's not what our founders intended. The Freedom from Religion Foundation is fighting back as the nation's leading group of freethinkers working to keep religion out of government. FFRF protects your right to think for yourself, whether you've always been secular, left religion behind, or simply believe in true religious freedom for everyone. If we don't stand up now, we may lose our religious freedoms. Join FFRF in defending our secular constitution and keeping faith a personal choice, not a government mandate. Visit ffrf.us/freedom or text PROTECT to 511-511 today to learn more and become a member. Visit ffrf.us/freedom, because in a truly free country, no one's faith should dictate everyone's future. Text PROTECT to 511-511 today. Text fees may apply.
USA.com.
TV and movie tough guy actor Joe Don Baker has died at 89.
Joe Don Baker broke through in the 1973 film sensation Walking Tall,
Your boy's 13. You're not rolling wise, guy. My money is.
portraying the real-life sheriff Buford Pusser in the vigilante action flick.
Look out, Buford!
Baker was in 3 James Bond movies, 2 times as a gruff CIA agent, opposite Pierce Brosnan in GoldenEye.
In London, April's a spring month. Oh, yeah? What are you, the weatherman?
And he played a brutal arms dealer in The Living Daylights. Steve Kathan, CBS News.
Sunday will be the 45th anniversary of the eruption of Mount St. Helens in Washington state. On May 18, 1980, the top of the volcano collapsed in an explosion of ash and gas. 57 people died. The resulting mudslide covered 185 miles, destroying more than 200 homes. I'm Heather Bosch.
The peace lily is so last year. Hey, has anyone noticed?
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. Good afternoon, everyone. Happy Friday. We've almost made it to the end of the week. We got 2 more hours with you right here on Bloomberg Business Week Daily. And we're seeing stocks extend gains right now. After we got a report about the U.S. and EU talks. We're going to have more on that from Charlie Pellet in just a minute. But suffice it to say that we're seeing equity markets higher by 0.6% on the S&P 500, the NASDAQ higher by 0.5 percentage point, and the Dow up by about 0.8%. So off of session highs, but still higher on the day, and really good week, Emily.
Yeah.
Oh, did I even say you're here?
I don't know, but
okay, that's
I'm not
Carol Masser. Carol's out today. Emily Griffeo from our Bloomberg News Cross Asset team. She's here with us once again.
Yeah.
Thanks for doing this.
Of course. And we have a lot coming up in the next 2 hours. We're going to talk about the latest on New Jersey Transit. Commuters right now finding themselves with few options after the first transit strike in more than 40 years. That's not why Carol's not here, but she is a New Jersey girl.
Yeah, she is.
She doesn't take this specific transportation that's affected.
She's good. Yeah, she's good for now. She's good for now. We'll see about next week.
That's also, New Jersey. We're going south, though,
We're going
right?
south. What are we doing in the south?
We're going to be speaking to Maddie Parker, the mayor of Fort Worth, Texas.
Yeah, good to have her back on the program. We'll be speaking with her in just about 20 minutes. Also, we're getting healthy today.
A new healthcare service tailored to lifelong athletes. Tim, you're one of those, right?
Trying to be.
We're going to speak to Alex Mather, founder and CEO of Eternal. We're going to learn about that company.
All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, thank you very much indeed. 53 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all advancing just about the best level of the day now on the S&P. Equities extending gains after the FT reported that the U.S. and the EU broke an impasse to enable tariff talks. So right to the numbers, the S&P now higher by 39, up 0.7%. The Dow up 335, up 0.8%. NASDAQ Composite Index up 99, up by 0.5%. 10-year 4.42%. The 2-year 3.97%. Gold now down 1.5%, 31.92 the ounce, and West Texas Intermediate crude up 1.4%, 62.50 the ounce. Boeing has reached a preliminary framework with the Justice Department that would allow the company to avoid prosecution over 2 fatal 737 MAX crashes, that according to lawyers for the family. And there's a massive corporate deal today involving 2 of the biggest names in cable. Charter Communications has agreed to combine with closely held Cox Communications. Michelle Davis covers mergers and acquisitions for Bloomberg News.
This is one of those perennial deals that's been talked about for literally a decade. In the cable industry, there are only, when you look at the chessboard, there are only so many combinations that can be made. And in November, John Malone said he thought Charter, because of the increasingly competitive environment that's facing the cable companies, he said they should be allowed to combine with someone. He named Cox as one of those people. He named T-Mobile. He also named Comcast.
And that's Bloomberg's Michelle Davis. Now, Charter up 2%. She mentioned Comcast up by 0.5%. Recapping stocks higher, S&P up 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie. So, New Jersey Transit, the locomotive engineers went on strike this morning, which triggered a shutdown of the agency's rail service and disrupted travel for hundreds of thousands of commuters. It's the first railroad strike in more than 40 years, Tim. We have with us to discuss Shree Taylor. She's Bloomberg News transportation reporter, joining us right now in the Bloomberg Interactive Brokers studio. So what did commuters do today?
So commuters who need to be on site, unfortunately, had to scramble for other options, basically. So transit agencies, neighboring transit agencies kind of knew this was coming. They were prepping for it. They were boosting service, adding extra buses or extra trains, just trying to kind of boost capacity for the extra riders. But everyone who can work from home, New Jersey Transit has advised them to stay at home.
We got to help out our listeners and viewers around the world who don't necessarily live in the tri-state area and give them some context about why this is essential to New York City running as it does to the economy of New York City, to the economy of the region. Just give us some numbers, some context about New Jersey Transit, who it carries, how many people it carries, that sort of thing, and what the effect of this is.
Right. So New Jersey Transit operates about 925,000 weekday trips, just system-wide, on a weekday. So that brings in about thousands and thousands of people each day into Manhattan and home. So, the New York economy is just going to take a huge hit if this continues on into Monday or Tuesday or those peak work days. Friday is a little bit easier because people work from home anyway. But New York employers do have to be mindful of if people can get in for those next few days.
Do we know at this point? And look, I think it's important to remember, you have the folks out there who can work from home, but you also have people who work in healthcare. Yeah. I mean, I think one of your stories earlier this week mentioned Memorial Sloan Kettering and the fact that it warned patients to be cognizant that this could actually happen. If we think about this from the perspective of, congestion in other areas, if you take a bus in, do we have any data on that at this point, Shree?
No data yet because it kind of just kicked off, but we could probably anticipate a lot of road gridlock. Shakira concert goers were like, the traffic is insane because there were no trains or bus service. So that kind of gives us a preview into how those peak days could go if people hit the roads.
Shree, we have to give you a shout out, you and your team, for this outstanding headline on an article. I'm just going to read it for our listeners. Hips don't ride. NYC NJ travel chaos leaves Shakira fans fuming. That's a great headline for any Shakira fans out there. But really, on a more serious note, what did the concert goers experience? Because I feel like you kind of expect there to be bottlenecks and traffic when you're going to a concert. How was this different? This was last night, I think.
This was last night, and there's another concert happening tonight at MetLife. So, those trains kind of eliminate some of that routine congestion. You're going to see traffic going in and out of a concert anyway on the roads. But a lot of Shakira fans had to carpool. They had to take this thing called the Megabus. They
had to MetLife.
Yeah, going to MetLife, and coming from was even worse, according to some of the folks we highlighted in the story.
So when you think about this from the perspective of the engineers who've gone on strike and what we heard from Governor Phil Murphy a little earlier today, break down what exactly is at issue here. Obviously, it's pay. The two sides do not see eye to eye right now. What's the point where they're going to actually come back to the bargaining table? What's keeping them from actually doing what many would argue is their job right now?
Yeah, wage has just been at the center of this. Obviously, they kind of negotiate a contract every 5 or 6 years, but their pay has been at the forefront. So union workers really want to, they're seeking parity with engineers at Amtrak or the Long Island Railroad, and they want to make about the same amount. And New Jersey Transit is saying, hey, we can't afford that. If we were to meet your demands, that would cost us millions, and we'd have to hike up fares by 17%. Or, we'd have to drastically cut service. So they're saying it's too expensive. And the union is saying, well, no, that's not necessary. So there are some conflicting reports on what the engineers make, what their base salary is, and what New Jersey Transit is saying that the engineers make. So they haven't seen eye to eye, and negotiations have been very tense.
So this was the first day of the strike. What do we know so far about like how the negotiations persisted today? What has the union said so far? Have they made any progress yet?
Yeah, so sources close to the union have told me that they have not met with New Jersey Transit since late last night. Union sources have said that New Jersey Transit walked away from the table around 10 o'clock to hold a presser with Governor Phil Murphy to kind of talk about the state of play. And then that night, they announced that they were going to strike kind of mid-presser. So they're not set to officially go back until Sunday with the National Mediation Board to kind of spar it out there. They could meet anytime before then. They could meet right now if they wanted to. But yeah, the next official confirmed date that they're going to meet is on Sunday. So we'll see what happens from there.
Here in New York City, the people who are familiar with our subway system, the MTA, it's not actually run by the city, it's run by the state. What's the governance like of New Jersey Transit?
Yeah, so New Jersey Transit is completely run by the state too, but it's our regional transit system. So we have people coming from Hackensack, we have people coming from deeper into South Jersey, from around Trenton, North Jersey, and they all kind of come into Manhattan and back. Or you also have those larger hubs in New Jersey, like Secaucus or Jersey City. So it definitely drives a lot of people in and out, throughout the day, not just in New York, but also in some major hubs in New Jersey.
What has your reporting shown about just some of the commuter stories? I know in some of the articles you have some people actually sharing their experiences of like what they actually had to deal with. Can you give us maybe one of the stories that you've reported on of just an actual real life commuter like dealing with all of this?
Yeah, well, I can definitely tell you that commuters have been coming to me just dying to tell me their stories. I talked to someone earlier this morning who said that, they came into Newark Penn Station very late and then, they were coming into Newark Penn Station very late, but they had no way of getting there. So they had to carpool with a bunch of strangers in an Uber to get home. So
look, nobody knows what the timeline of this is going to be, but given what your reporting has told you, what you've heard from each side of this, Shri, are you going to be still writing these stories next week in your view?
I hope not, but, as far as I'm concerned, this could last, indefinitely. As long as the strike is going on, service is going to be disrupted. So we will see what comes out of Sunday, but this could go on for a long time or a short time.
Newark Airport having issues with air traffic control, having issues with canceled flights, delayed flights. The air train that gets people to Newark Airport, is it affected by this?
I don't think so. I think that the New Jersey Transit train does have a direct line from Penn Station to Newark Penn Station.
So as long as you can get to Newark Penn Station, you should be okay. Well, that's not an easy thing to do without New Jersey Transit.
No, definitely not.
Shri Taylor, thank you so much for joining us. Shri is a Bloomberg News transportation reporter. She joins us here in the Bloomberg Interactive Brokers studio. Coming up next from New Jersey to Texas, we're going to be speaking with Maddie Parker, the mayor of Fort Worth. That's coming up next on Bloomberg Business Week Daily. Meantime, stocks still in the green. S&P 500 up 0.6%. Get the Bloomberg Business Week newsletter, BW Daily, delivered to your inbox every weekday. It's the power of Business Week in a handy form. Sign up now at Bloomberg.com/newsletters.
News when you want it. Get the latest headlines from Bloomberg News updated continuously throughout the day with Bloomberg News Now. Listen anytime on Apple CarPlay and Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
This is Caroline Hyde.
And I'm Ed Ludlow. Join us for Bloomberg Technology, a daily podcast focusing exclusively on technology, innovation, and the future of business.
We bring you the latest headlines from Silicon Valley and conversations with tech's biggest decision makers.
You have to have a pro-innovation mindset. We were partnered with OpenAI.
We've all experienced this incredible revolution.
Bloomberg Technology.
Listen on Apple CarPlay and Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
Bloomberg Podcasts. Context changes everything.
Snakes, zombies, sharks, heights, speaking in public. The list of fears is endless. But while you're clutching your blanket in the dark, wondering if that sound in the hall was actually a footstep, the real danger is in your hand, when you're behind the wheel. And while you might think a great white shark is scary, what's really terrifying and even deadly is distracted driving. Eyes forward, don't drive distracted. Brought to you by NHTSA and the Ad Council.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, William Lee, the Milken Institute.
Well, you saw what the UK did for creating a template as far as how partnerships work with the United States, right? That's an example where you had a lot of investment in the United States by the UK, and there's reciprocal understanding that Boeing buys Rolls-Royce engines, and then they buy back the Boeing plane. There's no tariffs on that kind of partnership relationship. Japan is one of these, also the great partners of the United States. Japan has one of the largest net investment positions in the United States, and I think the template that we're going to see coming out of the trade agreements is again an example of what good partnerships are. And now China, right, is the good example of what President Trump calls competition with the U.S. He chooses not to produce here, he chooses not to invest here, and you have a tariff wall. And I think that's going to be the template that we see going on to the rest of the deals that we will be making.
With all of your experience, is the 10% a firm wall of tariffs, or could the tariffs dip below on a blended basis and migrate back towards that 3% level?
You know, I think one of the best things that happened to markets was when Secretary Bessent talked at the Milken conference last week and reminded everyone, tariffs are just one part of a policy package of smaller government, lower taxes, fewer regulation. Those are the important ingredients. The tariffs are really a small piece that tells our investment partners, look, you come here to the United States, we'll give you a tariff wall to protect your investments from unfair competition. So I think the 10% number is there to stay.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 3:29 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all advancing. Best level of the day right now with the S&P up 36. That is a gain of 0.6%. The Dow up 309, higher by 0.7%. NASDAQ up 86, now up by 0.5%, on track for the second best week of the year. Your 10-year, 4.43%. The 2-year, 3.98%. Gold now down 1.4%. $31.94 the ounce, and West Texas Intermediate crude up by 1.3%, $62.40 a barrel. This Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. So the Dow, the S&P, NASDAQ all advancing today, but one of the big stocks that's moving higher, shares of Virgin Galactic right now up by 56% for a record intraday gain. Analysts encouraged by the space exploration company's first quarter results and firming up plans to introduce its new Delta spacecraft and launch private astronaut flights next year. Sequoia Capital managing partner Roelof Botha was among the Coinbase global customers whose personal information was stolen as part of a hack against the largest U.S. crypto exchange, that according to sources. And New Jersey Transit locomotive engineers, as we have been reporting, are on strike, shutting down the agency's rail service and disrupting travel for hundreds of thousands of commuters. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. We love checking in with mayors, and this one in particular because she's the mayor of one of the fastest growing cities in the country. We've got back with us Maddie Parker. She's the mayor of Fort Worth, Texas. She joins us from Fort Worth. And we should note that Fort Worth is part of the What Works City certification through Bloomberg Philanthropies. It is supported by Michael R. Bloomberg, the founder of Bloomberg LP. It is the parent company of Bloomberg TV and Radio. Maddie, good to have you back with us. It's been close to a year, believe it or not, since we last spoke. When we spoke to you last year, you talked a lot about the economy, about EV magnet manufacturing, the great relocation to Fort Worth. I'm wondering if you're still seeing continued strength in the local economy, or given the concerns that we've talked about nationally, there's a bit of a slowdown there.
Yeah, well, first of all, thanks for having me back on. It's hard to believe that was a year ago, Tim. So we're seeing a lot of that same economic success here in Fort Worth and Texas. Yes, the economy has kind of taken a different turn in the last few months, but all in all, people are pretty bullish on the Fort Worth, Texas market. Just in the last 2 years alone, Fort Worth has seen $3.7 billion of economic impact and investment. We have a lot of things in the pipeline right now that continue to see green light to go. So I have every reason to be optimistic, but we do keep our ear to the ground and really talking, especially on the manufacturing side, to understand on the tariff conversation what may be happening and what the United States economy, really what those impacts may be here in Texas and in DFW.
Tell us about that pipeline of growth and potential new businesses coming in. What are you seeing right now coming up?
Well, I think the important thing for those that may be listening to your program, it's for a fast-growing city like Fort Worth. We've continued to lean in the last decade to make sure we have a very diverse economy. You're really well known for our defense aerospace manufacturing. That continues to be the case, home to Lockheed and, of course, to Bell and their new program with the Army. But it also expanding into healthcare, advanced manufacturing, and other spaces. Announcements of Embraer, our own Standard Meat company, making big investments, and having a really robust approach across the entire city about what those things really do offer. One big piece I think that contributes to our overall economic growth is a robust higher education network across Fort Worth and Tarrant County and into Dallas County, all over DFW really. Over 55,000 graduates from our higher education institutions across DFW every single year. And then a lot of these companies that are relocating or expanding in Fort Worth know that they've got a great workforce connection. A nice fun fact for you to have is over 2.4 million workers are within a 30-minute commute to downtown Fort Worth. And so because of that connectivity across DFW, all the growth you're seeing across North Texas, Fort Worth really is poised to be successful. But I'd be remiss if I didn't mention this. Businesses and people vote with their feet to be a part of a high quality environment for their workforce and the families that they bring to our city. And we're seeing that in Fort Worth because people want to be a part of a well-managed city that's understanding what it looks like to be cresting a million people, but also be prepared for the growth today and into the future. And the city of Fort Worth really, I think, is handling that well.
Mayor Parker, you're competing not just with other cities around the country, but other cities that are within Texas. I mean, if you think about Texas and the growth that it's seen over the last few years, it's got 5 cities now within the top 15 in a population: Houston, Dallas, Fort Worth, San Antonio, Austin. What is the competition like to get new business? And what makes Fort Worth as a city stand out? Is it easier for Dallas, Fort Worth, for DFW because of what the dual cities close by have to offer?
Always said that we're stronger together across North Texas and being a part of the DFW region. You guys know this, we're soon to pass Chicago Metro as the 3rd largest metro region in the entire country. We're also incredibly fortunate that we're a part of the Texas booming economy, continue to be #1 as a pro-growth state by every metric that you look at because of the economic development efforts across the state of Texas. It was really important to us in Fort Worth, and this really started 4 years ago when I became mayor, to lean into being fiercely competitive in economic development. Our 4th Economic Development Partnership, led by Robert Allen, has been incredibly successful in the last 2 years. We're now on the map the way you want to be for these big potential projects and really leaning into those. But you're right, a lot of times we are competing with other Texas cities, but it's a friendly competition. We wanted first them to focus on Texas. And once we know they're focused on coming to Texas or expanding here, then we can kind of take the gloves off and compete with different cities. But largely, I would say in the last year, you've seen them really trying to choose between a city like Fort Worth and maybe down to Austin or Houston as a top choice.
So that's the business angle. I'm wondering, as mayor, are you seeing any signs of constituents feeling more pessimistic on the economy? Here at Bloomberg, we got data this morning showing U.S. consumer sentiment unexpectedly fell. That's really on the national level. But from your view, how are your constituents feeling about the economic outlook?
Say that anytime there's large economic uncertainty or infighting, partisan or otherwise, at a national level around the direction of our economy, it does translate here at home. Sometimes it's very specific. It's, around grocery prices and concerns there, or it's prices at the pump may be a concern, or just a general cost of living. Housing affordability continues to be a top issue in Texas and really in any growing area across the United States. You do see it translate. You might get different opinions from people as to why they may be holding their pocketbooks more closely, what their savings account looks like. But it's just really a part of how you weather the storm. I am hopeful that from an economic policy perspective, especially here in Fort Worth, where we do have such a robust advanced manufacturing network, and you really understand the impact of tariffs in particular, that we pay close attention to that. And we try to do our part as leaders at a city level, also working with our state and national leaders to understand, try to educate our public on where those impacts may fall. Some of it really, quite frankly, though, is out of our control. But I do think those national polls you mentioned do translate here in Fort Worth and probably in any large city across the U.S.
Mayor Parker, I want to talk education. I know that you've mentioned your 3 kids to us in interviews past. You have young kids in school in the Fort Worth area. According to the NPR affiliate for North Texas, KERA, the Fort Worth Independent School District has lost more than 12,000 students going back to 2019 and expects to lose an additional 6,500 by 2030. Help me understand what's going on there. Why is it losing students if the city's seeing growth?
It's a complicated answer to your question. And interestingly, if you look across the country at large urban school districts, a majority of them are losing enrollment and population. That's very true here in Texas. You have school districts like Plano or Duncanville that are losing population enrollment. I think it's a multitude of things. Number one is probably a change in direction after COVID. A lot of families started making different choices for their families. These kids still are in our communities, but they've got a lot of different choices. Here in the city of Fort Worth, we're home to 12 traditional public ISDs. A multitude of families are choosing private education, charter schools, homeschool families. By the way, over 600,000 families choose homeschooling in the state of Texas alone. So what I try to do is, rather than focus on the numbers because it doesn't impact their bottom line in a school district, is every single school district needs to focus on being the school of choice, having great options for their families if they want to bring families back into enrollment, but also acknowledging that these large districts probably are a thing of the past. By large, I mean when Fort Worth ISD was 85,000 students, now they're just north of 70,000. And as you said, preparing to go lower than that. So in fact, next week, they're going to face a tough decision about school closure and consolidation and enrollment. That's really focused on better student outcomes. But these are decisions that large districts are having to make across Texas and really across the United States. And as I said, it's a complicated answer and maybe not always the same in every single city. But we're still a young city, large percentage of young families and children here in Fort Worth. The average age here is about 32 to 33, which really bodes well for your local economy. And they're just choosing different options for their children rather than their large district down the street.
Mayor Parker, I'm wondering if this turmoil in the school districts could potentially prevent people, if you're concerned that it's maybe preventing people from moving to Fort Worth. And if so, what could the city do to kind of stem maybe some of that hesitancy?
Well, I would say this, lucky for us, the lack of growth is not a problem for us. We have thousands of people moving here every single year, contributing to the population growth you've seen. Just this week, we announced cresting over 1 million people and passing the city of Austin in population. And that's, as I mentioned before, people are moving for a quality of life they want to see in a community like Fort Worth. We're a large city with a lot of small town charm. People want to raise their families here and build businesses here. When it comes to education, though, regardless of whether or not I had children, I have a responsibility as mayor of this city to make sure that every single student has access to a high quality education. It really starts at birth and goes on to whatever their career path may be. We've done a multitude of things here to really refocus around student outcomes and efforts here. I'm really proud of the track that we're on. Fort Worth ISD is our largest district. Yes, half our students go to Fort Worth ISD. The other 11 school districts are also making their own efforts forward. But as any large city should be looking at, what is the state of our education in this country? And we can all do better. Adults need to raise expectations and really demand excellence and success from all students, regardless of their zip code. And we have a focus here and a goal in Fort Worth that every single child in our city, regardless of zip code or neighborhood, deserves access to a high quality education. And while this will be a long-term goal for us, we have certain programs and initiatives in place, including on Mayor's Council on Education Workforce Development, to really bridge those gaps and make a difference. Because to your point, long-term, it would have an impact. If we're not taking care of business and really recognizing that the students in our classrooms today are key to our success long-term, it would deter people from wanting to live and grow and invest in our city. And that really needs to be something we keep on the forefront of any effort we have around economic development. Education has to be at the center of that.
I know you're focused on Fort Worth as the 45th mayor of Fort Worth, but we have to end with your ambitions beyond being mayor. Are you thinking more about statewide office? Are you thinking more about national
I'm not right
office?
now, and I'll be honest. I don't know if either of you have children. My youngest is 8, turning 9. Right now, I'm focused on having a sleepover for 12 9-year-old boys at my house on Saturday night.
Oh,
that
God.
seems to be where my focus is. I love being mayor. It really allows me to serve here at home in a city that I love. I appreciate not being in partisan elections, quite frankly, and getting to focus on what really matters. But who knows? The sky's the limit, and God has a sense of humor.
Good luck getting sleep this weekend if you're having the sleepover. We appreciate you taking the time and joining us, Mayor Parker. Always good to check in with you. Maddie Parker is mayor of Fort Worth, Texas. She joins us from Fort Worth. We got less than 30 minutes to go to the close of trading on this Friday, and what a week it's been. We're hovering around session highs, just off of them, 0.6% to the upside on the S&P 500. Coming up next, we are talking media and telecom. That's next.
CBS News Brief. President Trump's big, beautiful budget bill hits a roadblock. Republican Congressman Lloyd Smucker.
I'm not going to disclose specific discussions that are going on, but it's just a few provisions that they'd like to continue to strengthen to ensure that it's a balanced, fiscally balanced bill.
Conservatives want more cuts. The president takes action in Iran. CBS's Natalie Brand.
The president confirmed his administration has presented Iran with a nuclear deal proposal, saying that country knows it has to move quickly or something bad is going to happen.
Trump has not ruled out using force to limit Iran's nuclear program. R&B singer Cassie Ventura continues testifying in her ex-boyfriend Sean Diddy Combs' sex trafficking trial. CBS's Jerika Duncan says the defense played an audio clip.
She's been very soft-spoken, very calm, but in this clip, she's cursing, she's threatening somebody over a video, saying multiple times, "I will kill you."
CBS News Brief, I'm Heather Bosch.
Get the news you need to start your day in just 15 minutes.
The U.S. and China have agreed to cool off their trade war.
The latest developments in the war in Ukraine.
Wake up with Bloomberg Daybreak U.S. edition.
Israeli forces have taken over large areas of Gaza.
Darren Judd, yet another home run.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
President Trump pushes higher taxes for the wealthy.
Subscribe to Bloomberg Daybreak U.S. edition on Apple, Spotify, and everywhere you get your podcasts. Bloomberg Radio. Context changes everything.
Join us in Seattle, July 14th and 15th for Bloomberg Green, 2 days of powerful conversations and meaningful connections. We'll explore what's next in the climate economy, clean tech, policy, and greener living. Featured speakers include Jane Fonda, Brian Gellert, and Vinod Khosla. The title sponsor is Amazon. Official airlines are Alaska and Hawaiian Airlines. Learn more at BloombergLive.com/Green Seattle. That's BloombergLive.com/Green Seattle.
This is a Bloomberg Money Minute. The housing market is being slammed by high mortgage rates, increasing prices on homes, as well as tariffs. In April, construction of new homes or housing starts were up a slight 1.6% to a 1.36 million annual pace. That's down 25% from 3 years ago. Most of the recent gains were in multifamily home construction, like apartment buildings. That number was up nearly 11%, while starts of single-family homes were down 2.1%. A new warning on housing is outlined in a report from Bloomberg Intelligence. It says the Trump administration's cuts to Fannie Mae and Freddie Mac, the government-sponsored mortgage giants, may put a damper on the housing market as it becomes harder to obtain some types of home loans. Heading toward the close, markets are being lifted by news of progress on trade between the U.S. and the European Union. Markets are up between 0.4% and 0.7%. I'm Nancy Lyons, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
The latest edition of the Bloomberg Intelligence Podcast, a conversation with Joanne Shu, University of Michigan Surveys Consumers Director, on consumer sentiment data.
Essentially, we should think of this as very little change from April. Over the course of this year, we've seen consecutive months of very, very strong declines. This most recent one was a very small decline and essentially flat. But as you pointed out, this is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And nearly 3/4 of the respondents spontaneously mentioned tariffs, and that topic crossed partisan lines. Can you tell us what you thought of that?
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop in terms of its impact on inflation. And it's not just the fact that tariff policies have come in pretty high, but it's also the uncertainty and instability of it. So following this most recent pause on some China tariffs, we saw a little bit of improvement, but it really wasn't enough to reverse the sour readings that we've been seeing for the last few months.
University of Michigan one-year inflation outlook, the consensus was 6.5%, which is an elevated number. What's driving that?
Again, it's the uncertainty and instability of tariff policy.
Hear the full conversation on the latest edition of the Bloomberg Intelligence Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all ripping higher. We're on track for a week in which the S&P has advanced about 5.1%. Let's head right over to the first word breaking news desk for the afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid right now, helped by a 6% gain in United Health Group. The Dow is currently up 300 points. S&Ps are higher by 32, and the NASDAQ is higher by 0.3%. The U.S. 10-year yield is at 4.44%. Gold is in the red, oil is in the green, and Bitcoin, that's higher by 0.2%. Among the main 11 S&P sectors, leaders were healthcare and utilities. Only energy was in the red, and leaders to the upside in the Dow, UNH and 3M, while Cisco fell 1.3% and led to the downside. After earnings, Applied Materials fell 5.6%. And wrapping things up, the Bank of New York Mellon is trading higher for a 15th straight day, is on its longest winning streak ever. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you, Bill. And to hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I take your car in the morning, it's 45 minutes.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Hey, I'm watching on what's going on in the world of TMT because we have a big deal. Charter Communications has agreed to combine with the closely held Cox Communications in a cash and stock deal that would value that would create two of the biggest U.S. cable providers. The takeover values Cox at about $34.5 billion, including debt. The combined company would be the top broadband operator in the U.S. It would increase Charter subscriber base by more than 20%. This is according to Bloomberg intelligence analyst Geetha Ranganathan. It also comes at a time when cable companies are facing increased competition. We got a special guest for our drive to the close today. That's Craig Moffett. He's founding partner and senior analyst at MoffettNathanson. He joins us from New York this afternoon. Good to have you with us, Craig. A deal such as this in the year 2025, could it face regulatory scrutiny?
Hey, Tim, good to be here. You wouldn't think so. Cox and Charter are adjacent. They don't directly compete with each other. Charter's pricing strategies in their go-to-market strategy is pro-competitive and pro-consumer. So you wouldn't think that this deal would face any challenges, even at the state level, because they'll also have to get approvals from the public service commissions and public utility commissions in the individual states involved. You wouldn't think it would see any challenges. But again, things have been sort of unpredictable when you get DEI considerations and things like that can hang up otherwise big deals that are ready for approval. You do have to be at least somewhat circumspect about what kind of process it'll face.
Okay, that's a deep tease for the Verizon Frontier conversation we're going to have in a few minutes, but we want to stick on Charter and Cox right now because that is the big deal of the day.
Right. And Craig, so you joined the show in January. I think Carol Masser was here. It wasn't me. I'm filling in for her. But your top pick for 2025 was Charter Communications. So I'm wondering, how has your view changed on the company in light of today's deal news?
Well, nice to see you, Emily. I think it's actually not changed at all. And in fact, I suspect that the reason that Cox was finally willing to agree to a merger after 20 years of being asked, or really, I guess, almost 20 years of being asked, they went private back in 2008, if I recall, is that the Charter momentum, and in particular, the Charter momentum in wireless and the converged offering of wireless and broadband together was so compelling that I think Cox probably said, we're better off to be part of the Charter family after saying no to mergers for 20 years. Maybe it's finally time.
Is it time because of what has happened in this industry over the last 20 years? The rise of streaming, the cord cutting that we're seeing, the secular decline of what's known as the cable bundle, and just the disruption that we've seen. I mean, in your career has been pretty remarkable.
It has, but I don't think that's really behind it. It's easy to probably the younger listeners don't remember when cable was about video. Cable's core product hasn't really been video for 15 years. Cable's core product has been broadband for at least 15 years. And so it's really all about broadband. What's changed is that we're now seeing broadband and mobile service being offered together in this kind of what is typically called within the industry convergence, but which they're trying to sell to customers as just sort of connectivity everywhere. The CEO of Charter was speaking at the Moffett-Nathanson conference for us yesterday and was saying that that he thinks when a customer pulls out of their driveway, they don't really care who's providing the service in the driveway, who's providing the service in the house, and who's providing the service outside of the house. They just want to make sure it works in all those places. And so what they're trying to do is convince customers that we can give you a better deal at a much lower price and give you the best connectivity everywhere. And it's working for Charter. And that's, I think, why the stock is up almost 60% year to date. It's been, or over the past 12 months. I think it's just people are starting to see the fruits of that strategy. And I think that's, again, precisely what Cox saw. And Cox has an agreement with Verizon for carrying wireless traffic that they are not able to put over Wi-Fi or over their own network. The same as Charter does, but it's not as good a deal. And so I think a lot of this was driven by, we want to be on the Charter deal that has better economics and better terms than the deal that we have with Verizon.
Is this going to keep working for Charter Communications, given the competition that they're seeing from the wireless companies that are now doing broadband into homes? I mean, I have Verizon or Charter offered where I live, and I can get Fios for $40 a month for a really fast connection, because it competes with Charter right there.
Yeah, you're exactly right, Tim. That's why you've seen pressure on the broadband subscriber numbers from Charter and Comcast and the rest of the cable industry. The answer to that the cable operators have been pushing is, well, a broadband competitor may be able to save you $20 a month on your broadband subscription, but we can save you $75 a month on your wireless subscription if you take it all together, and you will end up being much better off financially and have a better product. And that's a wireless service that actually, while the cellular portion runs over the Verizon network, it actually beats Verizon in network testing results, because the time that it's not on the Verizon network is actually running faster than the Verizon network does. And so it is by far the best, the lowest price deal available to customers. And that's what the cable operators are leaning into.
So what's the plan here for infrastructure and building out just more infrastructure for internet in the home? Are the combined companies now, Charter and Cox, going to be building out more fiber? That's kind of the infrastructure that delivers the fastest connection here, right?
Well, there's a narrative that fiber to the home, or what the industry is called FTTH, is better than cable infrastructure. It's not really. They are largely the same. In fact, overseas, there have been all these cases that have demonstrated that cable actually has more fiber than fiber to the home does. That is, a packet is delivered over cable spends more time on fiber than it does even on a fiber to the home network. So the networks are largely interchangeable today. There simply isn't really an advantage to having something that's called fiber over something that's called a cable network. So it really comes down to price, and the most differentiated part of the offer is actually in the mobility side.
Hey, Craig, before we let you go, promise we'd do 30 seconds at least on Verizon winning FCC approval for its $9.6 billion acquisition of Frontier Communications Parent Inc. Why, in your view, did this deal go through?
Well, I think it's pretty clear. It went through because they agreed to end all their DEI programs at Verizon, and the deal was approved minutes after that. And that had been the hang-up that the FCC had with the deal. But it's also, that deal is interesting because why is Verizon buying Frontier? They're buying Frontier because they want a bigger wireline footprint. Remember, they
Craig, unfortunately, got to leave it there. Craig Moffett over at MoffettNathanson. Coming up next on Bloomberg Business Week Daily, it is our cross-platform coverage of the market close. We call it the closing bell. That's next on Bloomberg Business Week Daily.
Live business news, breaking global headlines, and conversations with the names that move markets. Listen to Bloomberg Radio on command anywhere you have an Amazon Alexa device. Just say, Alexa, play Bloomberg Radio.
This is a Bloomberg Money Minute. The housing market is being slammed by high mortgage rates, increasing prices on homes, as well as tariffs. In April, construction of new homes or housing starts were up a slight 1.6% to a 1.36 million annual pace. That's down 25% from 3 years ago. Most of the recent gains were in multifamily home construction, like apartment buildings. That number was up nearly 11%, while starts of single-family homes were down 2.1%. A new warning on housing is outlined in a report from Bloomberg Intelligence. It says the Trump administration's cuts to Fannie Mae and Freddie Mac, the government-sponsored mortgage giants, may put a damper on the housing market as it becomes harder to obtain some types of home loans. Heading toward the close, markets are being lifted by news of progress on trade between the U.S. and the European Union. Markets are up between 0.4% and 0.7%. I'm Nancy Lyons, Bloomberg Radio.
Catch up with the biggest names in business. Listen to Bloomberg Podcasts. The Circuit with Emily Chang.
I speak with JP Morgan CEO Jamie Dimon.
Odd Lots with Joe Weisenthal and Tracy Alloway.
Austin Goolsbee, the Chicago Fed president.
And Bloomberg Wall Street Week with David Weston.
A discussion with BlackRock's Larry Fink.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
We have the perfect guest for this topic.
Bloomberg Podcasts. Context changes everything.
One of the most urgent documentaries of 2025 is streaming now on Jolt.
Based on groundbreaking reporting by Bloomberg's Olivia Carville, Can't Look Away reveals the hidden dangers social media poses to our kids.
It's invasion of your home. These kids have no safe place.
The social media companies are targeting them. We're going to have several lost generations of kids.
From award-winning filmmakers Perry Peltz and Matt O'Neill, watch Can't Look Away now on Jolt.film. That's JOLT.film.
When news breaks across the globe, Bloomberg Radio is there. From the Middle East,
The fragile ceasefire between Israel and Hamas is over.
to Europe,
Keir Starmer and Donald Trump have discussed trade.
and anywhere in the world news happens.
So let's go now to the climate talks in Dubai.
Debate luxury reporter in Paris.
Bloomberg's Stefan Kufner has more from Ecuador's capital.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app, and always on Bloomberg Radio. Context changes everything. This is Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Emily Griffeo. She's in for Carol Massar. A redhead crossing the Bloomberg terminal right now. The Supreme Court blocks President Trump's deportations of Venezuelans. We're getting that information to you now. We'll let you know when we have more on this, but just worth repeating. A redhead crossing the Bloomberg terminal. The Supreme Court has blocked President Trump's deportations of Venezuelans. Checking out the most read stories on the Bloomberg terminal right now. We've talked about quite a few of them, including what's happening when it comes to New York City, New Jersey transit. In the meantime, I want to talk a little bit about what's happening with the markets, Emily Griffeo, because we're on the cusp of a bull market.
Yeah, it's been a really incredible rally since the April 8th was
April
the
8th
low.
was the low, yeah.
And it's interesting because, like,
where were you on April 8th?
I don't remember.
You don't even remember.
Oh,
exactly.
you know what?
Do you remember?
I actually do remember. I was in a meeting, and then my phone was like blowing up with all the headlines that the S&P was up like 9% on the day because of the tariff pause. And we've come such a long way since then. But the economic data is still so weak, at least when you look at soft data. Consumer sentiment is, at a decade's low right now, at least according to numbers that we got this morning. Inflation expectations are low, or
high.
we should say high.
Not good.
They're not good. And yet the stock market is climbing higher. We're now in positive territory year to date, which I don't think you could say that a couple days ago. Sometimes what the stock market is doing is not often reflective of what's going on in the economy.
Yeah, I think that's fair to say. From those April 8th lows, the S&P 500 is up 19.5%. As you mentioned, we're positive in the S&P 500 for the year, up 1.3%, though we're still down half a percentage point when it comes to the NASDAQ composite. I think a lot of folks were really concerned about what we saw, what we were going to see when it came to earnings. I'm eager to get back on the program, Gina Martin Adams. She said, watch earnings. And it was really a tale. I mean, if you look back in hindsight, it was a tale of two different types of companies. You had the mega cap tech companies performed pretty well. And then some of the other companies, withdraw guidance and say, we have no idea what's going on here. There's just too much uncertainty.
The retailers as well saying that, this is not going to be good. Shelves are going to be empty, but it's still a little bit of a wait and see when it comes to whether the consumer sentiment is going to actually be reflected in spending data.
Yeah, Dana Telsey of Telsey Advisory Group, who was on our program yesterday, she was on Bloomberg Business Week Daily. She was on surveillance with me last week, and she said we're a couple weeks away from empty shelves.
Yeah, that's what Torsten Slok from Apollo
Torsten said it to us the same.
Saying,
Yeah. So, he's watching the same data that she's looking at, which I think has to do with the container ships that are coming from China. There is a lag. And, given what happened 6 weeks ago with this, with the huge tariff that was put on China, a lot of companies didn't end up shipping out from China. So we'll see.
But here's the thing. If you took that information and said, great, I'm going to pull all my money out of the stock market, I'm going to go to cash, you would have missed out on the rally, at least if you're an equity market trader. And a lot of those ETF investors, which typically are more retail, they kept buying. They bought the dip. They didn't stop.
That's a good point. Hey, I mentioned earnings. We're still in the midst of earnings season. We're going to hear next week from Home Depot and Lowe's. We're also going to hear from Palo Alto Networks. And we're going to be speaking to Wendy Whitmore, Chief Intelligence Officer over at Palo Alto Networks, in about 20 minutes. We're going to hear from Target on Wednesday.
Oh, that's a good one.
We'll get Snowflake on Wednesday as well. Thursday, we'll get Analog Devices, Autodesk, Intuit, Ralph Lauren, BJ's Wholesale Club, and Friday we'll hear from Booz Allen Hamilton, see if they got hit by the Doge cuts.
Okay.
So still hearing from companies.
Yeah.
Okay, cool.
All right. Well,
Are you ready for this simulcast?
Yeah. The simulcast.
No earnings today.
There's no earnings. That's good.
All right, you hear that music, you know what it means. We're just about 2 minutes from the close of equity trading here. The S&P 500 off its best levels, but still up 0.7%. Coming up next, it is our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. The closing bell, it starts right now.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bossick here with Scarlett Fu, taking you through to that closing bell with a global simulcast. It started. Tim Senovic is in the radio booth. Emily Grafeo in today for Carol Masser, Alex Seal on assignment as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, as we close out what has been, Tim Senovic, a very solid week for U.S. equities.
Yeah, one of the best weeks of the year for the S&P 500. We're solidly in the green on the S&P 500 year to date. And Emily reminding me a little earlier that we're up 19.5% from those April 8th lows on the S&P 500. So that was just like 5 weeks ago.
Right. And the market was still able to rally higher today, despite the fact that a lot of the economic data that we got showed consumer sentiment is pretty weak and Americans are expecting inflation to tick up higher.
Yeah, but so far that hasn't translated into the hard data showing that same kind of damage, right? So as long as that hasn't made that leap over, a lot of folks in the market are saying it's still time to sit back and see how it all plays out.
And it gets to this idea, though, too. I mean, when we talk about this rally, and I'm glad you brought this, or Emily, you brought this idea of this 19% rally off of their lows, of course, after having that effectively 19% drawdown from the highs on the S&P 500. We haven't round tripped just yet, but it is kind of interesting that this isn't necessarily being led by tech in the way that you would think it would be. It is a lot of the other sectors, right, Emily?
Yeah, I mean, that's right. If you look at the equal weight index, it's been rallying there as well. And also the Russell 2000 small caps outperforming both mega cap tech stocks and the S&P 500 today.
All right. Well, on a weekly basis, tech is out front, as are the discretionary names, but all of the 11 S&P sectors in the green on a weekly basis. As for the day, you have the Dow Jones Industrial Average closing out up about about 328 points, or about 0.8%. The S&P 500 up more than 40 points, or 0.7%, while the NASDAQ higher by 100 points, or 0.5%. The Russell 2000 getting in on the action as well, adding about 19 points, or 0.9%. And we should point out transports and mid-caps also getting pretty strong bids on this day, up about 1% each.
This was a broad-based rally, at least in the S&P 500 today. You only had 56 names move lower, while you had 446 names advance on this Friday afternoon.
Yeah, so it's a pretty clear IMAP too. Look at the 11 sectors in the S&P 500. Only one, energy, finishing lower by 0.2%. Otherwise, what's interesting here is that you have the defensive sectors, those that pay high dividends, healthcare, utilities, real estate investment trusts, and staples doing the best.
All right, let's go to some of the gainers on the day. An easy task to find these. I want to start with Charter Communications, up close to 2%. We could say 1.8%. The company has agreed to combine with Cox Communications. It's a cash and stock deal valued at about $34.5 billion. That does include debt. This combined company would be the top broadband operator in the U.S. It would increase Charter subscriber base by more than 20%. It would position them to better compete in this converging market where you have the wireless providers offering wireless service. You also have the wireless providers offering fixed broadband service as well. So it is a really competitive space. We just spoke to Craig Moffett over at MoffettNathanson. He reminded us the core product when it comes to TMT companies, it's no longer TV, it's no longer cable. This is all about broadband. Once again, shares of Charter today higher by 1.8%. CoreWeave finishing the day higher as well. 22% to the upside today. It more than doubled from its March IPO. This after NVIDIA reported its stake increased to about 7% of outstanding shares. This was as of March 31st. We learned this in a 13G filing on Thursday. NVIDIA was expected to have about a 5.2% stake in CoreWeave after its IPO. That was what the prospectus showed back at the end of March. And finally, look at what happened with Virgin Galactic today. Now, to be fair, the stock has been beat up over the last few years. Shares just soared today. It was up as much as 98% earlier in the session, closed higher by 43% to the upside, a record intraday gain. Analysts encouraged by the space company's first quarter results. They did say they plan to charge more for its space tourism flights when it resumes sales in the first quarter of 2026. They've got this new Delta spacecraft. It's going to hold 6 people, faster turnaround between missions. Then they'll clear this existing backlog of ticket holders in about a year. Also, they made about $460,000 for the first quarter. It was slightly above estimates. Negative free cash flow, though, expected to be between $105 million to $115 million in the second quarter, Emily.
All right, let's look at some of the decliners for the day. Applied Materials, this is a chip equipment maker. They gave a lackluster forecast for the current period, highlighting the potential cost of the U.S. trade dispute with China. So the company said sales will be about $7.2 billion in the third quarter, plus or minus $500 million. That was roughly in line with Wall Street estimates, but some analysts had projected as much as $7.4 billion. So that stock closed down about 5% today. I'm also watching shares of Hershey, the chocolate maker, was down 2.3%. Additionally, Mondelez was also falling as cocoa prices, which of course is a core ingredient in chocolate candy, surged to a 3-month high today on renewed supply fears as shipments from top grower Ivory Coast slow, and also dry weather threatens next season's output. So go and buy your chocolate right now, Romaine. Those shares were down 2.3%. And speaking of food, Cava was also down about 2.3% closing today. The fast casual chain reported first quarter results and updated their outlook, but analysts said that while the report was positive relative to peers, the dining establishment needed stronger results to justify the premium valuation. That stock is up a ton since going public in 2023.
All right, let's check in on yields here. Third straight week where we've seen yields rise, both on the 2-year and the 10-year. You see the numbers there. These are your daily moves. 3 basis points on the shorter end of the curve, not much on the longer end of the curve. But it should be pointed out, you go back to where we were in mid-April, towards the end of April, when yields were actually drifting lower. The big bump up ever since then, basically since the start of the month, certainly concerning. A flirt with 5%, of course, in the middle of the curve, in the longer end of the curve, and a flirt, of course, with 4% on the shorter end of the curve, 3.99 right now on your 2-year yield.
Okay. You know, this is a program that airs worldwide. We've got viewers and listeners all over, but our focus for part of the program today has been what's happening in the New York metropolitan area, given the strike, the first one in 40 years that we've seen. When it comes to New Jersey Transit, we spoke to Bill Maloney earlier, who typically takes him about 90 minutes to get in on the train. He had to drive to Hoboken from his home, walk from wherever he was able to park in Hoboken to get on the PATH train because he wasn't able to get on New Jersey Transit today. It's not just disrupting, though, people who are trying to get to and from Manhattan, from New Jersey for work. It's also going to disrupt Shakira fans who are attending the concert at MetLife Stadium tonight. And it happened even last night as well. Real hiccups.
You know, Tim, I feel like you usually expect that if you're living in New York or you're in the New York City metropolitan area, there's going to be a little bit of traffic trying to get to MetLife for a sports event or for a concert. But our Bloomberg News reporting sourced a tweet here. Someone tweeted that they sat in traffic for 6 hours for that Shakira concert, which that sounds like a lot more than you would typically expect. And
they better
again,
get this sorted out
Shakira,
for the Beyonce concert next week. Beyonce starts her 5 concerts in the MetLife next week?
Yeah, the Beyonce concert, Shakira folks got stranded yesterday. I mean, I don't know if you're actually a basketball fan, but apparently the New York Knickerbockers, who have, of course, sucked wind for decades now, actually in contention. So how are all those fans who don't live in the city going to actually get here tonight? They're going to drive in?
They're going to zoom in.
They're going to drive in?
Yeah, do a shared Uber.
No, but it gets to this idea too. I mean, and I know a little bit earlier on this program, we had some of the officials on this network. I should say we had some of these officials on. This doesn't seem like they're anywhere close to striking a deal. So I do wonder how long this goes and sort of how we sort of mitigate the impact.
Well, a lot of people are getting ready to work from home, perhaps. But, what's interesting is that in the markets, working from home on Fridays may no longer be something you can do because trading on Fridays has become a lot busier for portfolio managers. It's become the busiest day of the week because they need to prepare their portfolios for what could be market moving news from President Trump over the weekend. They're de-risking their portfolios, in many cases buying treasuries and selling credit.
Yeah, and I mean, more importantly, though, this is also about the price action as well. I mean, there was always sort of this churn, and this is specifically when we're talking about the fixed income space, was typically you can buy things relatively on the cheap on a Friday and then roll that over into next week. And now that's kind of been upended. So a lot of folks are basically working a lot longer and a lot harder and a lot later on Friday to sort of set themselves up and prepare themselves for maybe what happens over the weekend.
May I make a humble suggestion? No. To our investing audience.
What's that?
Perhaps maybe just buy another Bloomberg terminal for the vacation home.
There you go.
The place in the Hamptons.
You have an invested interest here.
Always
I would suggest maybe that would help with this challenge of just always having the information, at the ready. So you can enjoy a 3-day weekend perhaps, but also be able to act on that info.
All right.
It's just a humble suggestion, guys.
I think our bosses love you, Tim.
Oh, well.
Yeah.
That's the idea.
And this is why.
Hey, guys, that is going to do it. Have a great weekend, everyone.
You too.
I think the band is getting back together next week. I do want to thank all of you. It is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We will be back on Monday, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week. That is Emily Griffeo. I'm Tim Stenevec. Taking a look at what's going on with the markets right now, we actually see...
Well, the S&P closed up 0.7%, Tim. Really incredible rally here. Let's also take a look at crypto, though, because Coinbase was on a wild ride this week after there was news that it was being added to the S&P 500. It was a major milestone for the crypto company, because it was the first crypto exchange, the first crypto company at large to be added to the world's most famous index. However, later in the week, we got news of a hack at the crypto exchange, Jim. We also got news of regulators probing the company. So it's been a wild ride. But when you look at what Bitcoin is doing, it's up almost at 104 when you look at its price, 104K that is, Tim. Let's also take a look at some of the top read stories on the Bloomberg terminal to finish out the week. The first one here being that Trump's tax cuts were rejected by a House panel as hardliners are digging in. This, of course, is referring to a key House committee on Friday, which failed to advance House Republicans' massive tax and spending bill after hardline conservatives bucked Trump's vote here and block the bill, or his push here for this bill, and block the bill over cost concerns.
Hey, you mentioned, Emily Griffeo, some of the stuff happening when it comes to hacks, Coinbase specifically. I'm going to read some headlines here, okay? Sequoia Capital Partners data hacked in Coinbase breach. Coinbase hack highlights how greed can overwhelm cyber defenses. Coinbase customer data stolen. Just a sample of headlines from Bloomberg News and from the Wall Street Journal. This garnering our attention on a day such as today, and kind of perfect to have Wendy Whitmore back with us. She's Chief Intelligence Officer of the $128 billion market cap Palo Alto Network. She joins us from Santa Clara, California. Wendy, good to have you back with us. The Coinbase hack, I think, really highlights how our information is at risk, even if we think as consumers, as users of these products and services, it's safe. I mean, when you talk about the type of data that's at risk here, I mean, we're talking images of driver's licenses being available to hackers as a result of accessing the network. Talk to us a little bit about what we know regarding this hack and what it highlights about the vulnerabilities out there.
Yeah. Hey, thanks, Tim. Great to be back here today with you. So I think what you highlighted is really the just a fundamental problem we see here, which is how challenging it is for organizations to defend against every possible type of attack. The really interesting part of this case is that these attackers have demanded $20 million in ransom payment, and Coinbase has really turned the table on them in something that we haven't seen yet, which is a very public disruption of the attacker. And they said, you know what we're going to do? We're going to invest $20 million into a fund that goes after finding out who the attackers are that are responsible for this attack and bringing them to justice. And I think, as the largest cybersecurity company in the world, we at Palo Alto Networks, we don't ever want to see any client be paying a ransom, but we have not seen organizations previously take this kind of tactic. And I think what they're doing to disrupt the incentive structure and to make it a little more challenging. And I think attackers in the future asking the question of, well, wait, I don't know if I want that $20 million international fund, which is going to mean people who, I may be in my network, but may be willing to kind of turn me over to international law enforcement. I think they're going to start asking questions, and disruption in this cycle is really critical.
Yeah, I mean, I the sense that I have is that our information is not safe. I mean, I don't know how many times a day I get text messages. I probably get half a dozen text messages from these so-called pig butchers. Oftentimes I don't even pick up my phone if I don't recognize the number. I mean, honestly, the world we live in when it comes to this stuff, it's pretty annoying. Like, this is a very annoying place to be as a consumer right now. Is it going to get any better, or is this just the reality that we live with?
Yeah, that's a great question. I don't think you're alone in that sentiment whatsoever. It is challenging, right? So we are actually blocking 31 billion attacks per day across our customer base, and up to 9 million of those every single day are new attacks where they're novel. We haven't seen that same type of vector. So that gives you an idea of what companies throughout the world are up against. And then certainly you highlighted some examples that you as an individual consumer are feeling. So your question though was, hey, is it getting any better?
It's not getting any better for me. Will it?
I think it can get better. And I think that we're seeing AI actually be a massive tool for the side of the defenders, because as I highlighted, we're up against such a major scale problem. These attacks are getting more sophisticated. Real-time defense is absolutely critical. So what you're going to start seeing, Tim, certainly at the company level, all of the technologies we're able to use are actually making us able to scale against that better. But you're going to see that get into your consumer technologies as well, where they're going to start doing more effective blocking, and you're going to receive less text messages moving forward that are scams in nature.
When you talk about AI, something that comes to mind is just how scammers can use AI to say impersonate.
It's so terrifying.
Impersonate a parent, a family member, a loved one, and try and hack you that way. How concerned are you that the advancement of this technology, like, we're not going to be able to keep the defenses up strong enough to kind of combat the growth of cyber criminals using AI?
Well, I think there's two parts of it to really hit effectively to answer your question. First is on the technology side, that has to continue to get better. But two, we have to continue to increase awareness at the public level, and then make sure that people are making smart decisions about how they use technology. So when we look at it at a wider spread level in organizations, we see what you're talking about. Just last week, we were investigating a case where we were working for a firm who was a victim of a ransomware, and we were negotiating with the attackers to try to get additional information from them. And it became very clear almost instantly that we weren't talking to a person on the other end, but we were actually talking to a chat bot that they had enabled to do the negotiations for them. We certainly will continue to see more of that. Another example that we saw just in the last couple of weeks of investigating a case for a major organization, the attackers, once they got inside the environment, they actually they went straight to that company's internal large language model and started interacting with it to try to get more sensitive information, asking them questions about where the domain controllers were, what were their names, and finding out information that was actually helpful for them in the course of an attack. So that means that in order to really be successful here, organizations have to fight AI attacks with AI on the defense, and that has to be in real time.
And then what do we do as consumers? I mean, I know a guy who was getting calls that looked like it was from his bank. It literally said his bank's name on the phone. And he was so close to actually giving up the information when he realized that it wasn't actually his bank. Like, what are we supposed to do as consumers?
Well, I think we got to approach every conversation, unfortunately, with skepticism, do that same with every message. But for your bank, for example, most banks will say, hey, we're not going to reach out to you and ask you for personal information. Everywhere you can, use multi-factor authentication. It not only sometimes adds a little bit of time for you to get in, but it's going to make it a lot harder for an attacker to try to log in as you and essentially try to steal money or move money or maybe infect a social media account if they have to go through a number of additional steps to get there as well.
All right. Well, leave it on a positive note. Make sure to have two-factor authentication all the time. Unique passwords, too, is something that we hear over and over again when it comes to sort of safe security hygiene. Wendy, always appreciate you joining us. Wendy Whitmore, Chief Intelligence Officer of the $128 billion market cap Palo Alto Networks, joining us from Santa Clara, California. Just a reminder of where we closed out the day and where we closed out the week here, up 0.7% on the S&P 500 today. And Emily, on the week, one of the best 5%. Weeks, over 5%. One of the best weeks for the S&P 500. Coming up next on Bloomberg Business Week Daily, we are talking how to stay sharp and fit as we get older. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, or wherever you get your podcasts.
Get the news you need at the click of a button inside your car. The new Bloomberg Business app, now featuring Apple CarPlay and Android Auto. All your favorite Bloomberg radio shows, plus news at your fingertips. Download it free in the Apple App Store or on Google Play.
It takes a village to tell a story. And at Bloomberg.com, our village spans the world. With over 3,000 journalists and analysts in more than 100 global bureaus. Because if your focus is narrowed on your individual village, your tiny sliver of Earth, you'll miss out on the big picture. When you look at the world, what do you see? Learn more at Bloomberg.com. Context changes everything.
Don't you wish your life came with a warning app?
Stop. That dog does not want to be petted.
A heads up before something bad happens.
You should not send that text.
Uh-oh. Life doesn't always give you time to change the outcome, but prediabetes does. With early diagnosis and a few healthy changes, you can reverse prediabetes and prevent or delay type 2 diabetes. To learn your risk, take the 1-minute test today at doihaveprediabetes.org. Brought to you by the Ad Council and its prediabetes awareness partners.
Bloomberg Radio, on demand and in your podcast feed.
On the latest Balance of Power podcast, we talk with Republican Congressman Nick LaLota of New York about his hopes for President Trump's tax and spend bill that includes a hike in the SALT cap.
We all support the concepts behind the One Big Beautiful Bill. We all want a stronger border security when we want to put the nation on a better fiscal track. And there's some other priorities in there as well that are really important. Energy dominance, really important to the House Republican Conference. We've met other deadlines in the past about, responsibly raising debt ceilings, ensuring the government was funded, doing things responsibly like that under a deadline. I hope that we could do that again this time. This One Big Beautiful Bill has a couple of warts on it, but I think that we can work through that in order to get it passed ultimately.
Well, Congressman, it's good to have you back. I know you weren't happy with the level that was coming out of the Ways and Means Committee when it came to lifting the cap on salt. So are you actually encouraged by what happened to the Budget Committee today, or are you concerned about the way forward?
Well, it just recognizes the obvious. There are numerous factions within the conference who are displeased with different aspects of the bill. SALT, of course, has gotten a lot of coverage, but there are folks in the conference who are concerned about SNAP, about Medicaid, and of course, the deficit hawks have their concerns. So there are a couple of things holding this bill up. I hope that we get to yes, but with respect to SALT is a pay for. Mm-hmm. The bill as written right now from 2017 has the SALT cap expiring at the end of the year and going back to unlimited. And unlimited SALT over the next 10 years is valued at $1.3 trillion. And that's what's going to happen if no bill passes and if folks like me vote no and others vote no.
Hear the full conversation on the latest edition of the Balance of Power podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. 5 in a row for the S&P 500 indexes. Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, NASDAQ all advanced today with the S&P on the week up by 5.2%. Back at 59.58, up 41, up 0.7%. The Dow up 332, up 0.8%. Nasdaq Composite Index up 0.5%. 10-year 4.43%. Spot gold down 1.3% today. Gold now at $31.99 the ounce, and West Texas Intermediate crude oil up 1.3%, $62.39 a barrel. Virgin Galactic shares up 43%. Analysts encouraged by the space exploration company's first quarter results. Recapping, S&P up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As we've been reporting over the last hour, the U.S. Supreme Court extended an order blocking the Trump administration from using a wartime law to send a group of Venezuelans to a notorious Salvadoran prison, faulting the government for not giving the men adequate notice about its deportation plans. For more, we bring in June Grasso. She's Bloomberg News legal analyst, also host of Bloomberg Law. Weeknights at 6 p.m. Wall Street time on Bloomberg Radio. June, you've got a large stack of papers. You're reading the decision right now.
I confess I haven't gotten to the dissents.
What page are you on?
Okay, no.
She's many pages into it.
Yeah, I'm going back and forth. I think I made it through the per curiam.
Okay, so what do we know about this case? Okay. I mean, what does this mean?
So this is the same case. Remember in April at 1 a.m, the Supreme Court issued an order. I don't ever remember a Supreme Court order coming at 1 a.m. saying that you can't deport these Venezuelans without due process. Due process meaning, notice, an opportunity to be heard. And it turns out the Supreme Court found out, and also the plaintiffs, who are the Venezuelans, some who are in custody, about 5 of them, that what they were doing is, instead of real notice, they were being told, yeah, you have a right to an appeal or whatever. But that was it. They weren't telling them in English. They were telling them in English. They weren't telling them in their native language how they would go about it. So you have notice. How much notice do you have? In order to file a writ of habeas corpus, you need to get a lawyer usually. So how much notice do you have to do this? They weren't giving them that. They weren't telling them the way that they could protest their removal. And so the Supreme Court now says, wait, you have to give them due process. They have to be told and given an opportunity. But how much notice? We don't know. So that should be decided by a lower court who's like on the ground where they are. Unfortunately, where they are is the Fifth Circuit, which is the most conservative circuit in the country, and already basically looked at this and went, nah, we don't have to deal with it. So what happens now is that the removal of the Venezuelans that are actually represented here, the plaintiffs here, is stayed until something is decided about whether or not what kind of notice they decide to give them. Mm-hmm. But it's stayed also because now the Supreme Court is saying, if we take this case, if you file a writ of cert and we take this case, then their removal will be stayed until we're done with the case. And what they also reference, which I think is interesting, they reference Abrego Garcia's case twice. Okay. And they say, look what happens when we let you, Abrego Garcia, being the person who was illegally deported to El Salvador.
And he's still there.
And yes, and they say, we don't have to bring him back. The Trump administration said, we're not bringing him back. Kristi Noem said this before Congress. We're not bringing him back. And we don't have to bring him back, but we don't have jurisdiction over him. So the Supreme Court is saying, oh, remember the case of Abrego Garcia where you said you didn't have jurisdiction? That's why you can't fly these people out, because then you'll say you don't have jurisdiction. So it's in a little, it's in parentheses, remember the case, but it's telling the Trump administration, you did this all wrong. This is not the way you're supposed to deport people. It says you can deport them under other means, but not this way.
If courts have previously told the president and his administration that they have to facilitate the return, for example, of Abrego Garcia, and he hasn't done that,
He hasn't.
Does this matter? This decision even matter in the context of getting the administration to stop doing what it's doing?
Because the Trump administration had asked again for them to allow them to expedite these removals. And this is all, do you remember last weekend when Stephen Miller was saying we want to suspend the writ of habeas corpus, which, by the way, every authority I've talked to has said, every legal authority, you can't suspend the writ of habeas corpus. It's only been suspended 4 times in our history. And when Lincoln suspended it during the Civil War, he's the only president to do so. It's looked on now as like that wasn't the right thing to do. So that's why they're talking about suspending the writ of habeas corpus, because they want to send these Venezuelans out quickly. They don't want to wait for a trial. They don't want to wait for even a hearing.
Wow.
They just want to send them out quickly without due process. And then you'll have a situation like Abrego Garcia where they're saying, we can't get him back.
June, we're going to have to leave it there, but we love you. Thank you for joining us. There is more to come. We know you're still getting through this case, so we do appreciate it. A Bloomberg News legal analyst and host of Bloomberg Lots, weeknights at 6 p.m. Wall Street time on Bloomberg Radio. June Grosso joining us. Let's switch gears a little bit because I don't know exactly what to attribute this to, Emily. Maybe it's the popularity of the best-selling book Outlive by Peter Attia and Bill Gifford. Maybe it's the fact that, like, my own confirmation bias, that I'm getting older, I got young kids. It doesn't feel as good to perform like, in athletic competitions as it used to. So you got to do more to stay in shape. But something is definitely happening with older athletes and wanting to maintain performance.
Yeah, I don't know if it's confirmation bias because, like, I'm so much younger than you.
Actually, I think something really different is happening because you're thinking about this in your 20s.
No, I am. I'm in my 20s and I'm still thinking about health. I actually read that book, Outlive. I'm thinking about I want to be fit for the next, decades to come. I don't know. Well,
Alex Mather sees a business opportunity in this. He's a serial entrepreneur. His latest venture is called Eternal. It's raised more than $13 million. It's backed by venture capital firms such as Lightspeed, Courtside Ventures, Treble Capital, and more. It's called Eternal. Alex joins us from San Francisco. Alex, good to have you with us. This is a new healthcare service. It's tailored to lifelong athletes, and now people can sign up for it. What exactly does it offer?
Yeah, thanks for having me. Eternal is a high-performance healthcare service, like you said, built for folks who consider themselves physically active. And what does that mean? I love the word high performance. Folks at work or folks in other sports or other parts of their lives, when you think about high performance, it's setting goals, building out plans to achieve those goals, and then executing those plans. And what Eternal is a way to think about you as a human being aging, whether you're in your 20s, your 30s, 40s, or beyond, thinking about your health, your performance, and the process of aging in that same way.
Why launch this company now? Because like Tim said, it feels like maybe it's just our own anecdotal experiences, but it really does feel like more people are paying attention to like living longer, being healthy longer. Longevity is the word I'm looking for. Is that why you launched this? Longevity is in vogue right now?
Partially. I think I'm like the two of you. I've read the books, listened to the podcasts, but we're also living at a moment where all of us are, sort of in the front row watching our parents and our grandparents live longer. And that's amazing. Modern healthcare has brought that to us. But what we're seeing is sort of that last decade or two is tougher. And we're dealing with those consequences, and we're seeing that live. And we're also at a moment where there's just incredible breakthroughs happening every single day. We're all getting access to sort of a proactive mentality around our own health. And when you combine those two things, we think it's ripe for companies to come in and really help people navigate a really important aspect of their life that's incredibly complex. And we're just really excited to be in the middle of that.
Alex, I want to talk a little bit and learn a little bit about what you're offering, because I think cynics out there could say, You don't necessarily, there are a lot of companies out there already that offer, quote unquote longevity services. And I've looked into these and I've talked to doctors about them. And the doctors I've spoken to have said, some of what they do is evidence backed, is evidence based. It is based on the science, but they're also selling you stuff you truly do not need and stuff that is a waste. So how do you separate the actual critical, essential stuff from the services that you really don't need?
Yeah, so started the company about a year ago, and we just launched publicly a few weeks ago. And in this past year, we've met with hundreds of folks who are active: cyclists, runners, triathletes, folks who do yoga or go to the gym. And we kind of were sorting out what they needed or what they wanted and where they lacked. And what we saw was that most people go into it thinking, oh, I need this supplement or this hack to make me live longer. And what we saw in the data was that almost everyone needed, very close attention to really big things in their health, in their fitness. Like we call them rocks versus pebbles. And, you listen to the podcast, you read the books, you get tons and tons of pebbles, lots of ideas, lots of tactics. But at the end of the day, sleep, nutrition, physical activity, strength, muscle, all these things that are more basic came to the forefront for us. And what we wanted to help folks do at the end of the day was, if you have 10 hours a week, 5 hours a week, whatever it is, to dedicate to your physical activity, where are you going to get the most bang for your buck? What's most important for your aging process? If you're going to go run the Boston Marathon, we can help you. If you're, thinking about adding muscle mass, we can help you. Where are you strong? Where are you weak? We're there to support you. And I think most folks that we talk to lack strategy, not tactics.
Okay, so to get those strategies, you could become a member at Eternal. How much is it going to cost someone to become a member? And also, it looks like on your website, there's a wait list. So how does this work and what do you have to pay for it?
Yeah, so the way it works is first, the first thing we do is connect you with a dedicated coach, dedicated doctor, and a nutritionist. And so that's your team. And so that they get to know you remotely. And then you come in and get assessed. So we have locations in San Francisco and New York, with more coming. And we physically assess you in a bunch of ways. We take your blood. We get you on a treadmill or on a bike, look at your VO2 max, your lactate threshold. We do a strength and power test. We put you on a DEXA scan.
Tim and I should compete on this. We should go together and compete.
Let's do it.
We've had husbands and wives want to do that. Totally fun. It's a really great experience. And folks don't realize how hard they work and how much they push themselves. And we look at you as a human being across all of these different factors. And so the team behind you looks at that data over the next week or two.
Okay.
And they come up with a ton of information that's there to help you.
We only have 10 seconds left. Price, just so we know. Price?
$4,800 a year. That includes 2 full assessments, full access to your doctor and coach.
All right, Alex Mather, founder and CEO of Eternal. This is Bloomberg.
CBS News Brief. In a 7-2 decision, the U.S. Supreme Court has denied a request from the Trump administration to deport a group of Venezuelans detained in Texas to El Salvador under the Wartime Aliens Enemies Act. They can be deported under other immigration laws. Cutbacks at FEMA. CBS's Peter King says states might be getting less for disaster relief.
Acting Administrator David Richardson says his priority is to implement the president's plan, with states getting just 50% reimbursement rather than the 75% they've been getting.
An attorney for victims' families is denying reports the federal government may drop criminal charges against Boeing for 2 deadly 737 MAX 8 crashes. CBS's Michael Wallace.
An attorney for the victims' family says dismissing the case would, quote, dishonor the memories of the victims who Boeing killed through its callous lies, end quote.
346 people died in the crashes. CBS News Brief, I'm Heather Bosch.
Every Bloomberg radio show.
This is Bloomberg Surveillance.
You're listening to Bloomberg Business Week. Every Bloomberg podcast.
Welcome to the Odd Lots podcast.
This is The Big Take.
Every Bloomberg News headline.
A Bloomberg News exclusive.
Historic moves in the Treasury market.
Catch every moment of Bloomberg Radio inside your car.
This is a joy.
The Bloomberg Business app, now on Apple CarPlay and Android Auto. Download it free in the Apple App Store or on Google Play. Bloomberg Radio. Context changes everything.
Don't miss the 5th Qatar Economic Forum powered by Bloomberg this May 20th to 22nd live in Doha. Programmed by Bloomberg News, the Qatar Economic Forum will convene the world leaders and international CEOs who are providing unique perspectives on the critical issues facing the global economy. Join us in Doha and be there as it happens. Request an invitation today at QatarEconomicForum.com.
This is a Bloomberg Money Minute. Stocks ending higher again, wrapping up another week of gains on hopes for more trade deals, thanks in part to reports of new talks with the European Union. Despite consumer sentiment right now at a 3-year low on worries about the Trump tariffs sending inflation higher, at the close, the Dow was up 332 points, 0.75% higher. The Nasdaq up 99, 0.5% higher, and the S&P added 41 and was up 7% just this week. Another sign that trade out of China is on the rebound following last weekend's tariff truce. Shipping giant CMA reports seeing a big upswing in demand for freight coming out of Beijing. And the wireless giant Verizon winning FCC approval today for its nearly $10 billion acquisition of the Dallas-based TV and broadband provider Frontier Communications. But that is only after Verizon capitulated to the Trump administration's demands to dial back its DEI, diversity, equity, and inclusion initiatives. Tom Busby, Bloomberg Radio.
Bloomberg Radio, on demand and in your podcast feed.
The latest edition of the Bloomberg Intelligence Podcast, a conversation with Joanne Shu, University of Michigan Surveys Consumers Director, on consumer sentiment data.
Essentially, we should think of this as very little change from April. Over the course of this year, we've seen consecutive months of very, very strong declines. This most recent one was a very small decline and essentially flat. But as you pointed out, this is a very, very low reading. Consumers continue to feel very dour about the economy. They're worried about the impact of tariffs on inflation and also the impact on unemployment. They're really worried about multiple dimensions of the economy. That was what they saw last month, and they continue to see dark times ahead.
And nearly 3/4 of the respondents spontaneously mentioned tariffs, and that topic crossed partisan lines. Can you tell us what you thought of that?
We've been seeing a rising share of consumers spontaneously mentioning tariffs. A few months ago, it was really a fairly small number of people, and now it's almost 3/4. It's cutting across partisan lines. It's really on everyone's minds. And at this point, consumers are really waiting for the other shoe to drop. In terms of its impact on inflation. And it's not just the fact that tariff policies have come in pretty high, but it's also the uncertainty and instability of it. So following this most recent pause on some China tariffs, we saw a little bit of improvement, but it really wasn't enough to reverse the sour readings that we've been seeing for the last few months.
University of Michigan 1-year inflation outlook, the consensus was 6.5%, which is an elevated number. What's driving that?
Again, it's the uncertainty and instability of tariff policy.
Hear the full conversation on the latest edition of the Bloomberg Intelligence Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all advanced today, but our top story, the U.S. Supreme Court has blocked the Trump administration from using a wartime law to send a group of Venezuelans to a notorious Salvadoran prison, faulting the government for not giving the men adequate notice about its deportation plans. Stocks higher today, 5 in a row for the S&P 500 index. S&P today up 41 to 59.58. That was a gain of 0.7%. Dow Industrials up 332 points, up 0.8%. Nasdaq up 0.5 with a 10-year at 4.43%. The 2-year 3.98%. Gold down $43 the ounce, down 1.3%, $31.97. West Texas Intermediate crude up 1.2%, $62.37 a barrel on WTI. Charter Communications up 1.6% after agreeing to combine with Cox Communications in a cash and stock deal valued at about $34.5 billion. But what about potential regulatory issues? That question for Craig Moffett, founding partner of Moffett-Nathanson, who appeared right here on Bloomberg Business Week Daily.
Things have been sort of unpredictable when you get DEI considerations and things like that can hang up otherwise big deals that are ready for approval. You do have to be at least somewhat circumspect about what kind of process it'll face.
Craig Moffett of Moffett-Nathanson, the Cox family, will be the largest shareholder in the combined company. I'm Charlie Pelley.
Welcome to our TV network, your ultimate destination for all things exciting and essential. From mouth-watering food to the latest in fashion, health, education, music, movies, and news, plus thrilling sports and breathtaking travel. Our TV network brings it all to you. Tune in today and experience the best of every world. All in one place, rtv.network.